Investment and Smart Cities Conference 2025. We appreciate you being here. This is a gathering of various industry leaders in finance, in development planning. We have surveyors here, we have engineers, people from all walks of life that regard the concerns property investment. We thank you for being here, and we promise that this is going to be a very insightful session. We have a lineup of very amazing, brilliant speakers. We have presentations, we have a fireside chat. It's a rich experience this morning. Please stay with us. Do not be in a hurry to leave because we have something beautiful here. This is where the decisions will be made. This is where, if you have questions regarding, or you're just here to learn from the speakers regarding property investment and the industry, please do pay attention. If you want to know how this today's lineup of events will go, you can just scan the brochure there. That's a QR code. You scan it, and then it will lead you directly to our agenda for today. Thank you very much for being here, and we appreciate you. Right about now, we'll be moving on to the next thing. The next thing on our agenda today is the opening speech. Is the opening address by publisher BusinessDay Media Limited, Mr. Frank Aigbogun. A round of applause as he makes his way up to the stage.
Good morning, ladies and gentlemen, and what a pleasure and delight to welcome you all to our conference this morning. We're indeed grateful, and we commend you for coming out as early as you have. We wanted to start at exactly 10:10, but I think we are even now doing better in terms of timing. Welcome. I see quite a number of my friends there. And so I'm well at home. Friends who are not just friends that you get together socially with, but friends with whom you have had business relationship, people who have supported events and initiatives over the years. And so I want to thank all of you. And in thanking you, I thank the most those who know, and they know that they have been our great supporters over the years. Thank you, ladies and gentlemen. I have a brief speech. Don't know whether to call it speech or just remarks, which I will go ahead and deliver very quickly. We are told that the commissioner, Lagos State Commissioner, who will be representing the governor, will join us shortly, but we thought that we should get going, and then when he comes, he will just show in and would of course give him the opportunity to make send the message from the governor of Lagos State. The industry or the sector has been you know, as a journalist, there are some key things that I look at when we talk about housing. And I am reminded during the time of President Jonathan, there was this man, very renowned economist, Professor Paul Collier, who used to be chief economist of the World Bank. And he's currently perhaps any economist outside of Nigeria that I have so much respect for how knowledgeable they are of the economies of Africa. This guy is one of them. He's currently director of the Department of Applied Economics at Oxford University. He said something at a retreat organized by the federal government at the Villa those days. And he was saying, if you look at the housing deficit in Nigeria, if he were president, he will use dealing with the housing deficit as a tool to really get the Nigerian economy on its feet. And he said, for instance, Aliko Dangote was there at in the hall, and he said, why not democratize access to cement? Just make it easier. I don't want to say easy. Make it easier for Nigerians to access cement and to leverage that tool to rebuild the Nigerian economy. And that you could get very, very close to what happened in the UK in the time of Margaret Thatcher, when using council housing, they really changed the landscape of the economy of the United Kingdom, gave people a sense of belonging. You know, for a man, there is nothing so uplifting to come to the front of your door, take the key out of your pocket, open it, and get inside. And I say to people, it is what makes a man, that you have a house of your own. And I find that people who are even more or better people who are even better in terms of their financial disposition suffer a lot more to get a house or to build a house than their peers in some other countries, simply because of the strength of the structure, the mortgage structure that exists in their country. And I say this because I know that in our midst here, we're talking to different people. There are those who are involved in actual construction. There are those who are involved in funding the construction. Then there are, of course, those who are managing when the construction is completed. And then there are those who are intermediators who bring people who have money in touch with those who build houses. So across the value chain, we have people here in the hall. And my comments are directed at everybody. I think one thing that we must do in whatever sphere of influence that we have is to ensure that we are not only just talking about a mortgage industry, that we are in our own little way doing what we can do and must do to make that mortgage industry to actually happen. It's a duty for all of us, not just a duty because we are business people. I think it's a duty as human beings. We must nudge the government, influence the government, push the government, whatever it is that we can do to ensure that we actually are able to succeed. I don't know what your numbers are. Some people say housing deficit is 13 million, some say it's 17, some say it's even above 20 million units. And I asked the question, for every house, I think you probably would need 10 to 25 people from ground up to build. Multiply that by how many millions? Even if you face delivery of 1 million a year, that would deliver how many jobs? Are there statisticians here? How many jobs? 20 by 1 million is 20 million every year. And that will take you 16, 17, 20 million to complete and take away that housing deficit. But over the years, what we do is just dance around the edges, even with our best contribution. And you know what? Because we are having more babies every year, that deficit increases rather than going down, regardless of that which we do. But I think it's important, as I close, first to just commend the work that we all do, all of us here. I was hoping that the commissioner will come so that he would hear my comments as well. Thank you for the work you do. What keeps you awake at night? What takes you out of home every morning? We can see it. Not all of us slept under the bridge last night. Yeah? Some of us slept in houses, and it is because of the work that you do. So, congratulations, ladies and gentlemen. But I believe we must move beyond that. We must begin to make that stride that is important for us as a people. I read a story in the Financial Times several years ago, and this just relates to a simple policy shift in China that allowed people to get their own houses, to get their own titles. And I didn't even think about that. You know what it did? People were able to use that title to access funding to send their children abroad for the best of education. So, wherever you go now in secondary school, universities in the US, in the UK, in Europe, use Chinese all over the place. It was orchestrated simply by a policy that was meant to give people houses. But what they got was more than houses. So there is a lot that we gain as a nation if we can just empower our people. And so there is a lot we lose as a nation when we fail to empower our people by continually denying them access to homes and access to titles to those homes. I thought to contextualize our meeting this morning, just to say that we have a lot of work to do. It is not just in the brick and the mortar. We need to unleash some real growth. The rebasing of our GDP exposes the extent of the contribution of the real estate to the Nigerian economy. We now know you can't play with it, you can't trifle with it. It's so pivotal, it's so core, to our national economic development. I hope together, working with you, working with the government, I can assure you, BusinessDay will continue to convene everybody that is important in that sector. For us to continue to take the steps that we need to take until we start celebrating the triumph that we are able to achieve. Once again, ladies and gentlemen, let me welcome you so warmly and to say that I am not a speaker here this morning, but I was told I must give this welcome. We are, as part of our own contribution, launching our Real Estate Digest today. And copies will be delivered shortly. It is our own contribution in promoting the excellent work that you all are doing. It's our own contribution in tracking policy. It's our own contribution to advocacy, ensuring that we continue in a pace that is adequate towards our destination. And before I go, let me finally thank our supporters, those who have been so generous in ensuring that we are able to gather here this morning in comfort. Dear Fatimile, we thank you. Gravitas Investment, we thank you. Q Shelter Investment Limited, we thank you. UPDC PLC, we thank you from the bottom of our hearts. We are also grateful that you do not just support us by what you say. You support us with your hard-earned naira as well. We are indeed very grateful. I hope that there will be more others who will join this list of patrons for our Business Day Real Estate initiatives. We indeed are in need of your support. Once again, thank you very much for coming out here this morning. Thank you to our speakers and our panelists who have already arrived and those who are on their way coming. I think we can get the conversation started. God bless you all.
Can we give another round of applause for the publisher, Business Day Media Limited, Mr. Frank Aigbogun? You know, he mentioned something very important. How many of us here would like to own a house? How many of us would like to own our own homes? Yes, I'm also raising up my hand if you didn't notice. So, yeah, and in this room right here, we have everyone in the value chain. We have developers, we have quantity surveyors, we have financiers, we have investors who can make you achieve or help you, in fact, achieve that reality. So stick around and pay close attention because there's just going to be a whole lot of things will be said today and will be achieved today that you must not miss out on. All right, so we have a WhatsApp community. Business Day has a WhatsApp community that honestly, if you're not part of, you're missing a lot out on. This is the QR code. Please, if you just have your phone with you, you can just go on WhatsApp or any app you use to scan QR codes. Just and join our WhatsApp community. Over there, we're having a lot of fun over there. We're sharing secrets, business ideas. We're helping businesses grow and know what is happening in their industries. Over there, I was standing and I noticed that many people still don't know my name because I forgot to introduce myself. My name is Bethel Olujobi. I'm a gentleman of the press, and I'm delighted to be your host for today. A round of applause for me. Okay, just so I don't seem selfish. A round of applause for yourselves as well for being here. All right. All right, so let's move on. Let's move on to the next thing. We have a keynote address by the CEO of Eximia Realty Co. Limited, who is also the chairman of the Lagos Business Investment Co. the PLC, Mr. Hakeem Oguniro. Please, a round of applause as he joins me up on the stage. Let's keep clapping as he comes. Thank you. Thank you, sir.
Good morning, everybody. I was just asking whether they were going to put my presentation. So first of all, I'd like to thank Business Day for this event, for this advocacy platform, and well done for this the Real Estate Digest. Looking very interesting. And thank you, Frank, for inviting me to share some thoughts on the theme of this conference. I have the topic that I've been asked to look at is building what capital trusts in a market that rewards discipline. And I've just tried to, did I shut anything down? Okay, I think they need to do some setting. So basically what I've done, I've tried to ask, so in my outline, I raised 4 questions. I tried to be a bit thematic. So I've raised 4 questions for us to consider in this keynote speech. Then I have my opening thoughts on the topic. Then I tried to set the context, and because I think it's important that we set the context, just like Frank has also done, to set the macro context. This is not part of my 20 minutes, though. So I try to set the context, general context, looking at what are the change drivers for real estate today, because the change drivers will also determine the direction of capital. Then I also try to look at capital stewardship. Unfortunately, in this part of the world, and that's why I like the topic that we have chosen, looking at capital discipline, we've not taken discussions around capital stewardship into the mainstream. So I think this is very good for us. So I look at capital stewardship, just trying to set the context. I look at capital discipline. My topic is what building will capital trust in a market that rewards discipline. Then I'll briefly look at the drivers of real estate capital. What are those factors? I always say that capital is always rational. Investment capital is rational. At any point in time, you can predict the travel direction of capital. So what are those drivers of real estate capital? And finally, I will look at what capital trusts, which is essentially trying to say whether we can find an alignment between asset creation and capital deployment. And that's what we're talking about. Can we find a perfect alignment between capital deployment and asset creation? I don't know why the system is not showing the presentation that I've worked so hard to put together. So I've asked 4 questions. What is the significance of capital stewardship in property investment? What are the drivers of capital for real estate investment? Why capital discipline? And then how to create the perfect alignment. The slide you see is my opening thoughts. It's a quote from my book, which is not showing, so I'll just read from here, because I think it summarizes the whole essence of this discussion. Now, in my book on the law and practice of real estate investment trusts, please permit me to quote myself. I said, real estate is essentially a financing game. Funding is a key driver of real estate development, and the success or otherwise of any real estate developer is intricately tied to its ability to match its assets and liabilities sustainably over the long term. Understanding this fundamental fact underscores the necessity for the development of robust structures for capital mobilization for real estate. So essentially, I've always taken the view that real estate is a financing game, and that it's important that as a developer, you have to be able to match your assets and liabilities sustainably. I always joke that if you're unable to match your assets and liabilities sustainably over the long term, by the time BusinessDay is doing this conference next year, you won't be in real estate again. You probably will be back in your village, farming or doing something. So the whole essence of that is what I've tried to put together in that whatever. Okay, so I try to set the context very briefly. Look at what are real estate change drivers, because at the end of the day, whenever you sit, because capital owners, they are looking at the direction of real estate. They are looking at new asset classes. They are looking at where infrastructure is going. They are looking at, of course, they are driven by some factors which help them to. I was speaking to some. I was in a brainstorm session with some investors sometime last week, including some big capital providers. And I told them that one of the biggest asset classes that we're going to have in Nigeria in the next few years is care homes. Care homes. People are not paying attention. The reason is simple. All of you have shipped your children to Australia and Canada and wherever. So creating a platform for managing old people 5-10 years from now is going to be a big asset class. I have no doubt about that at all. But here I look at the real estate change drivers. I'm sure you know some of them. Urbanization, democratic trends, particularly in Nigeria, that about 66% of the population is 30 and below. Capital providers are going to look at what you are building and see who you are building for. Are you still stuck in the old ways, or are you understanding the dynamisms that comes with the new people that we're dealing with? This is a generation that values Wi-Fi and connectivity more than swimming pool in their homes. In those days when you are thinking of the amenities you put in your estate, you are saying, okay, in luxury, I'll put lawn tennis court, I'll put this, I'll put that. But today, communal lounge, connectivity are much more important for this generation, as I have found out in my business. So you have to understand who you are building for, because that is what capital is going to be asking you when you're asking for the capital. Real estate is facing new competition. There are new asset classes, cryptocurrency, collectibles, art, gold. Because one of the greatest challenges for real estate is liquidity. So you're competing against assets that are nimbler, that are much more easily scalable than real estate. And so you also have to begin to think of creating asset classes that, rather than buy buildings, people can buy interests. They can buy interest in those vehicles, which can easily be turned into cash when the time comes. Of course, technology, we know what PropTech is doing. Sustainability, ESG and governance, climate smartness, risk management. These are all the issues which are germane to capital providers today. So I leave that. I look briefly at what is capital discipline, because this is the core of this conference. What is capital discipline? And I've defined capital discipline in real estate as a strategic, data-driven approach to allocating financial resources that prioritizes long-term value and risk mitigation over rapid expansion or short-term speculative gains. So when you begin to talk of capital discipline, you're looking at long-term sustainability. You are not. Most of us in this industry we're opportunistic. We have herd mentality. We all, my people say we all sleep and put our head in the same place. But capital discipline requires you to understand the fundamental basis of stewardship. That whenever you have capital in your hand, there's a reason why the capital is in your hand. And when you deploy your capital into real estate, it must be with intention to earn a return. One of the points that I've made in this presentation is that, you have to be a return-driven investor, a return-driven developer. And this return is ROE, return on equity. But in real estate, there are two other ROEs. There's return on ego, and there's return on emotion. Those are not the issues that we're talking about. So, I'll give you an example. So, if in your church, they announce from the pulpit that, the church is buying land at Moe, and you put down your money, that's return on emotion. No analysis is done, you have not visited the site, you just put money because everybody is putting money. That's a return on emotion. If you go and build a big house in the village, just because your neighbor, maybe your parents call you that, somebody has built a house, so I'll build a bigger one. That's return on ego. That is not what we're talking about. We're talking of smart, capital-savvy investors who understand that I'm deploying risk capital, and when I put my capital, there's a threshold. In fact, you will have established a threshold of return that you want, and that is what we're talking about. So capital discipline makes you to focus on value creation. It's not just about speed. It's about value creation. It's about long term. It's about how will I be there for 5 years, for 10 years, for 20 years? That is what capital discipline is all about. So why capital discipline? That's my next slide. Why capital discipline? It helps to manage your emotions. You manage emotions. It is not about ego or emotion. It's about hard, rigorous analysis that drives your investment decisions. It enhances investment trust. It builds resilience. See, at the end of the day, it is who and who will be here, who and who will be there in another 2, 3, 4, 5, 10 years. It's not about I've done one project, I'm a one project champion. It's about creating a sustainable pipeline of projects that you can drive your capital in a manner that one project runs into the other. You're looking at debt not as liability, but an instrument. You have to understand how your capital stack works. And you have to be able to, at any point in time, know how you move the various elements of your capital stacks to drive what you are driving. And of course, like I said, it's about sustainable growth. So what are the elements? What are the key elements of capital discipline? It's interesting that number one is downside first mentality. Capital discipline requires you to think of what could go wrong before you know that you have returns. I used to tell my legal advisor in those days that if you bring a land to me in Lagos and it has no problem at all, I probably won't touch it because I haven't seen a parcel of land that has no issue. So it's either that I see the issue today, I take a position whether or not I want to live with the risk, whether or not I can manage the risk, or whether or not I want to run away from the transaction. Capital discipline is about investment by box. You must have definite criteria. There are specific criteria. So you have your criteria. This transaction falls into your criteria. You go ahead. It doesn't. You don't manage the criteria. It's about phased capital development. One of the things that I have learned is that you phase your projects, you phase your capital deployment, so that you don't have project indigestion. So when I see people who announce that I'm starting 2,000 housing projects, and I look at them, have they done 50 in the past? Have they done 60 in the past? Capital discipline encourages you to phase your capital deployment. So you start phase one, you learn some lessons, it becomes your learning curve, and then you move to phase two. But then the learnings that you have taken from phase one, it helps you to do things better. It's about resilient capital restructuring. You always focus on your balance sheet strength and not just speed. It's not just about speed. It's not that I've rolled out 10, 15, How sustainable is your balance sheet? And of course, your due diligence must be rigorous and exceptional. I'll look at capital drivers very briefly. I always talk about, when you're talking of capital drivers, I'm rounding up also. Capital drivers, we're talking of the 3 R's: risk, return, and regulation. The interesting thing about real estate is that, you can dimension everything about how capital will flow into what is the risk, what is the return, and what is the regulation. And that drives you into the pull factors. What are those factors that pull capital to real estate? You're talking of yield, you're talking of risk, security, exit. Part of the challenge with real estate is liquidity. A capital deployer is always interested, if I want to exit this transaction, how do I exit? Size, scalability. Can I scale quickly? Real estate, you can't scale. It's like manufacturing, If you're buying stocks, you can scale. You can do twice, thrice, within a week. But real estate requires a longer perspective and way. Let me round up. What are the trust levers? I call them the trust levers that you look at in looking at what capital will trust. Number one is that there must be alignment with the opportunity footprints. What you are building, you have to constantly look at the opportunity footprint in the market. And capital will trust if your building is in alignment with that footprint. Quality development, regulatory compliance. One of the risks that you face today, not just in Lagos, is demolition risk. So if I'm sitting before you as a capital provider, the first thing I'm asking you is that this is your project. What is the approval order in this place? You cannot start it without understanding the approval order. You look at the approval order, you follow through all the processes that people like to shortcut. I always tell, when all this demolition was happening, I told my customers that it can never happen to my projects. Because where I was brought up, I will not till the ground unless all my papers are complete. I will not. It can be laborious. It can be. You may lose time. You may lose some time. You lose some money. But in the long run, you're always better off. Capital is looking for compliance. Capital is looking for market absorption. What is the absorption capacity of the market vis-a-vis what we are building? What is the absorption capacity? If you go and people start doing luxury developments and I'm wondering, somebody who has 300 million, 400 million, will not go and buy a house in Moe, That is the reality of the matter. So you look at the market absorption, and that's the way capital providers are thinking. Of course, title, indivisible title, ESG and sustainability. And finally, capital will trust a development that is secure, because the person who is giving you capital wants two things. He wants to give you money, he wants to earn the interest, he wants to ensure that there's guaranteed repayment of the principal and the interest. When you do that, capital will trust you. Thank you very much, and God bless you.
Thank you very much, sir. Can we give him another warm hand? Okay, so we'll be moving on to, if you look at the agenda, I'm sure you expect us to move into the presentation, but we want to take the fireside chat right now. And to get that going, I'm sure we have our people here. All right, so the fireside chat will be moderated by Mr. Ayodeji Odeleye. Is he here? He's the Vice President of FIA BCI Nigeria. FIABC Nigeria. He's not here. All right, so while we wait for a development on our agenda, I would just like to say that from the last session, one thing I learned is that real estate is a long game. Real estate teaches you patience. So if you coming into the industry without patience, if you're coming to the industry without capital discipline, you will learn a hard lesson. And so I think that is something that all of us can take away from that. Thank you once again, Mr. Hakim, for that very insightful presentation. A round of applause for him. So we'll take our first panel right now. The first panel, which will be discussing developing under discipline. We just talked about capital discipline. This panel will discuss developing under that kind of discipline. Building assets capital will fund. And to moderate this panel, I would like to call up to the stage Mr. Akin Okpatola. He's the chapter president of FIABC Nigeria. Thank you very much.
Good morning, everyone. Good morning, everyone. Awesome. So I have 50 minutes, and I would quickly bring up my panelists. Can I please have Mr. Odunayo Ojo, CEO UPDC, up on stage, please? Can I also have Chudi Ubosi, Principal Partner, Ubosiele & Co. Round of applause for him, please. Next, Tola Akinhomi, Head Real Estate Finance, West Africa, Stanbic IBTC Capital. Also, Irejua Gbadebo, MD, a co-development company. And last but not least, trying to face Udo Ukonjo, CEO, Fine and Country, West Africa. Okay, she's not here. Okay, so we need to get right to it. So today we'll be speaking and delving down from the keynote presentation. This panel will be discussing developing under discipline, building assets capital will fund. So with the absence of Mrs. Udo Okonjo, I was just speaking and saying that we have the entire real estate cycle here. We have a lawyer, we have a developer, we have a finance person, we have a seasoned estate surveyor, and valuer. So the entire cycle is here. So we've gone through great length to pick out the absolute toughest questions because of the seasoned professionals we have here on stage. So Mr. Oduayo, we'll be starting with you. So real quick, so we all have your profiles, so we'll go into introductions. But so UPDC has moved from luxury concentration towards broader market participation. What lessons has that transition taught you and your company about pricing discipline in volatile macroeconomic environments?
Good morning, everyone. First, I'd like to thank the organizers of this event for inviting me to speak, and it's a pleasure to be here. So, to answer that question, some of us would know that UPDC, we are a property development company. We used to be very active in the luxury end of the market for many years. But in the last few years, we've moved more toward what we call the middle income housing market. And it was a deliberate and a strategic decision for the company. We believe that the real estate industry is a collection of several markets. As the professionals know, we have the luxury market, we have the middle income market, we have the low income market, we have social housing, what some people call affordable housing, and so on and so forth. As the keynote speaker had already said, as a developer, as an investor, you need to decide which part of the market you want to play in and be disciplined about it. So it was a deliberate attempt to shift the focus of the company from the luxury end of the market to the middle income end of the market. And it was for some economic reasons. We believe that being a publicly listed company, scale was very important to us. We believe that where you can scale the most in the industry sustainably is in the middle income segment of the market. And why is this? We believe that the middle income housing is where you have sustainable economic and effective demand. These are people who have jobs. These are people who work, in the oil and gas industry, telecoms, insurance, banking, and so on. And they also need housing. Like the popular saying, how do you eat an elephant? Is one piece at a time. We have a very huge housing demand problem in the country. How do we solve the whole problem? You have to be deliberate about which part of the value chain you want to attack. And UPDC chose to attack the middle income housing, and we've been doing that sustainably for the last few years. Thank you.
Thank you. Judy Bosi, this question is for you. Institutional investors often worry about title clarity. The keynote speaker has spoken about that. And legal encumbrances, even long after the construction is completed. How significant is land documentation risk today in determining valuation outcomes and loan pricing?
Again, I thought Oduayo would thank on our behalf, so I don't have to thank again for inviting us. So I thank you. I thank this day on behalf of all of us here, so nobody needs to thank anyone. I thank BusinessDay, sorry, on behalf of all of us here, so we don't need to thank again. Okay, my brother, the guest speaker, had talked about title, and he said something very interesting. If you give him a plot of land that doesn't have a problem, he won't touch it. That's actually a standard in the industry. Sometimes you get into some of these plots, and the first thing you do is, no matter how much you secure your title, except of course you're talking about some of the high-end areas, you want to drop some sand and some cement and some blocks to see if anybody is coming for, because your sea of old steel does not guarantee you peaceful occupation or title. And before I now delve into the valuation thing about valuation standards, let me say something about title in Nigeria. We have a gross floor land area 927,000 square kilometers, total land area of Nigeria. Less than 10% of that land is titled. Less than 10%. In fact, 10% is generous. You know, when we sit in Lagos and we see CFOs flying all over the place, when you get to a place like Jigawa or Nasarawa, you will struggle to see a CFO. Less than 10% of that land is titled. So when you now begin to look at valuations, which you have asked, how does it affect the outcome? When you begin to look at valuations, when we do asset appraisals, UPDC comes to us and the development in Ogombo, which is where I know you have some sites. We're saying the development in Ogombo. We need a value to the land. It can have two different titles. The Omonile title and the Lagos State title. They have two different values. Because you buy from the Omonile, we know that you will still have several steps you're going to take. You go and get your C of O. They will come back. They will ask you for foundation money. Another group will come back and say you bought from their grandfather. The man is now dead. You have to repurchase from the current children and so on. And so on and so forth. And so in doing those valuations, we have our parameters for making allowances for these various scenarios that are faced. But in the final analysis, some real estate asset with a CFO surely will command good value. And at the end of the day, that influences what the developers are going to get. And again, I'll refer to what he said. You don't, as a developer, you don't go into a development without solid title. Because eventually what you're selling is actually titled. It's not the nice development you have done there. What you're selling is the title that that property has. It can be 10 years, it can be 50, it can be 90. And so these are the various things that at the end of the day will impact the values that the developers will put on their assets. I hope that answers. Does that answer the question?
Yes, it does perfectly.
Okay,
Perfectly.
thank you.
Okay, Tola, I have a question for you. But before that, let me properly introduce Udo Okonjo. So nice to you have joined us, CEO, Fine and Country West Africa. And I was saying before you came in that you're the missing piece in the real estate life cycle. I know you are a lawyer. We have Mrs. Gbadebo, who is an architect. We have the developer. We also have seasoned estate surveyor and valuer, and we have the finance person. So Tola, from a lender's perspective, what has fundamentally changed in how Nigeria's property risk is priced over the last 5 to 10 years?
Yeah. All right. Thank you. Morning to everyone. Thanks for the opportunity to be here. I think BusinessDay has done this a number of years. This is my first time, and I appreciate the invitation. I'm just speaking. Yeah. So I think a lot has changed, and and kudos to Mr. Oguneo. I think that was a very well thought out and disciplined presentation. It spoke to the art of what we are discussing here. Real estate requires capital, and capital has different forms. The role that I've played over the last 2 decades thereabout is within the actually both equity and debt, but where we're focused currently is around that, given how our institution has morphed. I think what has changed, and not so much about pricing, and it's a story of how our market has evolved. Mr. Greenon talked about asset classes. So we started from, commercial real estate, so retail, offices. I think the season we're in, and that's also because of some government reforms, is actually the residential asset class exploding. And and that's where the biggest gap is, and that's where the biggest impact is as well. So I think there's been a lot of lessons over the years in terms of how the other related asset classes that have been financed, have they fared. A lot reacts to the macro impacts. We've seen the impact of exchange rate, impact of interest rates. I mean, the good news is interest rates, there was a margin reduction yesterday, 50 bips. Doesn't scratch it, but is a start. The beauty, which will be music to every developer, is that at least for the residential asset class, you can obtain mortgages at single-digit rates. I think that's such a catalytic initiative. So pricing would always, react to macro balances. It's defined firstly from the central bank, but as financiers, you are in a competing space, so you would always, provide funding based on what the current cost of capital is. So those are the antidotes around it. But I think what is most important to also take home is that the focus, I think, for developers shouldn't always, and there's a fair reason why they would focus that way on the interest rate or pricing. Cost of capital is cost of capital. It's the same way cement cost is cement cost. So there are different elements or inputs into the asset class. And I think what capital does is ensure that you can execute from end to end. And I think once that is done, then it comes to how the product is priced to monetize the asset. So I think in summary, there's been a lot of lessons. You always price track record. Yeah, that is key. Because that's less risky. If someone has track record, that is good. So you always price that. There's the macro impact as well, and also the tenor. Those are things that, from a financing point of view, you would always consider. But I think the good news is that there is growth, there is opportunities, and I think there is capital that is available to support these developments. Thank you.
Well said. Okay. Irejua, this is for you. Premium urban developments increasingly compete for institutional capital rather than just buyers or tenants. From your experience delivering high-value mixed-use assets, what differentiates a project that attracts patient capital from that merely attracts market attention?
Good morning, everyone. Thanks for the question. I'm not thanking Business Day again, because they've all done it. No, but thank you. Nah. That you've asked. Thank you. It's a very interesting question that you've asked. Typically, what happens is that you find that certain developers who started off and have consistently delivered, they are the ones who actually attract the capital. The other thing that people look for, so long time ago, I was asked, then I was the MD of an international company, and I was asked to market a development to my international clients. And I said to them, where is your write-up? Where's your research? Where's your market research? Where's your business case scenario research? And my very good friend over here actually touched on that. Now, I'll give you an analogy from, say, designing as an architect. So you go talk to your client, and your client says, I want to build a luxury house. And you say to him, where do you live? And he says, I live in Moe. I want to rent it out at a high price. Now, as the professionals, you also need to help in the best possible way, educate your clients. Say, sir, listen, I think in Moe you are better off doing this, that, and the other. Sometimes they come to you and they say they want to do this fancy piece of real estate. And you ask them, is there a demand for this? Because if there isn't a demand for this, and you don't have the capital yourself to build it and wait for people to come and rent it, i.e., you may not get your money back, then nobody will lend you the money. Nobody will come to you. So research is important. And I've learned the hard way, and I hope it's improving, that consultants who help with this research are not necessarily best valued in this country. And I have many colleagues here who are experts at that, including my friend over here and Roland. So if as a new developer, because it's new developers that often have the problem, if as a new developer you want to begin to make a mark, you need to surround yourself with consultants who have the experience to guide you in the right direction in order to get it. Now, I've been part of the development of many projects in every single, most of the industries or the market segments here, from retail to residential to commercial and now to mixed use. And those fundamentals are the same. Who are the developers? Have you done the research? Who are the consultants? Have you got your paperwork? Have you got your title? Title is a problem here. It really is. So often, those developers will then partner with people who have the title. They have the land. What do you want to build? Okay, what's your research? I want to build a retail shopping center. Where? In the back of Kwarafa. Who is going to come? One famous project that I won't mention failed because the city in which they placed it did not have the people power to sustain the size of the development. And this development was built absolutely beautifully by the best contractor, or one of the best contractors at the time. All the money was put in there. But no tenants could come because there was no market for them. And that piece of research, so it's not rocket science. It doesn't matter how much you want to do something. If you do not do it properly, it's going to fail. And I would say the same thing of each and every person here. You're all experts in your own field, but you went to nursery school and then to primary school, then to university to study, then you did your apprenticeship in some good firm, and then you became an expert. You didn't start off as a 4-year-old saying, I'm now an expert architect. It doesn't work that way. So the same thing with projects. You set up those foundations. If you don't have those foundations in place, nobody is going to lend you the money. And then you look, as my very good friend here said, look at the cost of your finance. If you don't have enough equity to minimize the cost of your finance, can the end product sustain the cost of finance or your borrowing? I've spoken to many developers. Oh, I'm a developer. Okay, my client wants to do X, Y, Z, and he says, hey, so what we're going to do is we're going to borrow the money. No, if you're a developer, where is your pocket? Where is your own pocket? I've worked with UPDC now in a past life since one of their very first, in fact, probably your first development on Borderland. And right from the get-go, that's how it started. We'll do it little by little. And as we sell, as we rent out, we'll do the next one. We won't start building a big fence and a huge gate and nothing behind it, which is standard in our country. It's all the same, isn't it? I know, right? But these are the sort of things that happen. And so we need to look, we have a difficult society. We all know this. We have very difficult working conditions. And that's why, for me as a Nigerian, I'm very proud of Nigeria and Nigerians, because I think given the difficulty of the market, and I'm talking every single industry in which that we thrive, is a testament to our resilience and our desire for excellence. But we mustn't forget that discipline. I mean, Hakeem spoke about it. It's vitally important, and it starts from the bottom. I don't know, I've touched on so many things. I don't even know if I've answered your question, but really, that's what's made developers money come to the developers that I've worked with. That discipline, those steps that they've taken, that evidence to the person giving the money that this person has thought about their project, they've done their research, they've gotten their papers in place, they've picked a good team, they've got a good product. Yes, I'm confident to finance it. So thank you.
Thank you. Thank you. So, Udo, so we started with a very easy round of questions for the first round. So you get an easy one also. If Lagos and Abuja were competing globally for capital alongside Dubai and, let's say, Nairobi, what must Nigerian developers fundamentally rethink? So that's for you.
That's a PhD question. Okay. I've been set up.
You should see the other ones.
Okay. Okay. I mean, listen, I think that the way we have to think, I mean, that question, yes, it's PhD, but it's also fundamental because, you know, Nigeria is referred to as the giant of Africa. And obviously being the giant of Africa, it must show from, you know, across board. Economics, business, leadership, politics, all of that stuff. Now, when it comes to real estate, the question you've asked is really the question we've been asking for many years, which is to recognize that capital is not sentimental. Institutional capital, diaspora capital in particular, is just not sentimental. It's strategic, and it goes where there is predictability, where there's resilience, and of course, a lot of the things you've mentioned, and I'm sure has been mentioned that you also alluded to. It's really about market dynamics. But I want to talk more practically about, you know, what are some of those challenges and therefore the gaps, but also the opportunities that the developers should be looking at, because we have what we have. We have, you know, the blank canvas that we have with the complexities and all of that stuff. So anybody who's doing business in Nigeria, the giant of Africa, is obviously creative and innovative and needs to be thinking out of the box. And that's something that I believe that BusinessDay, you know, through this platform and the numerous, you know, real estate and other business initiatives that it's been pushing, gives us all the opportunity to listen to some of those innovative ways of thinking. So if you talk about predictability, there's from the regulatory side. Real terms, do investors, users, stakeholders understand the rules of the game? Do we understand how to get approvals? Do we understand the places that are zoned for what? Because predictability is not just about the person who's giving capital. If a buyer buys a home anywhere in Lagos, do they know that in 10 years, in 20 years, the Pharaoh that did not know Moses is not going to pull down that structure? Because at some point, these were the rules of engagement. At some point, the rules changed, or maybe they didn't. Maybe it's the people who changed. But that level of transparency, predictability, is what makes the difference between investing in Lagos versus Dubai, versus Kenya, versus Accra, South Africa, anywhere else in the world. Any of those locations you mentioned, there is information, basic information from a developer. If I want to buy, just last week, someone sent us a development in South Africa. We have an investment collective for, senior women across Africa, not just Nigerians. So that opportunity that we're sharing, we needed to assess it against an opportunity in Lagos and in Morocco and in Dubai. That's the new world that we're in. Now, that presentation had everything, the title, the approvals, all of that information. In Nigeria, when you ask those questions, yesterday I sat with a developer that flew in from Abuja, and at some point I had to apologize and say, I know this is not a Spanish Inquisition, because we're not necessarily used to expecting that level of information. But why are we asking that question? Because ultimately, real estate property is not about bricks and mortars. It is about capital. It is about title. It is about investment. And if you're thinking about it from a future-proof point of view, which is in 30 years, 10 years, 50 years, 100 years, as an investor, whether it's a family office or an institution, I need to understand that this asset holds and is not subject to who is in government and who is not in government. Thank you. So what will a developer then do? The developer that is able to show credible information. Many years ago, we were contracted to sell 225 apartments in 1004. It belonged to Zenith Bank. We all know at the time, UAC, UPDC was selling it off. The Mobile Cooperative had their own block that they had bought. Zenith had theirs. We had the Zenith. What was the first thing that we did? We created an FAQ. It was a 5-page FAQ, frequently asked questions, to give the investors clear information on what was going on at the time with 1004. Yes, we know 1004. Yes, it used to be legislative quarters. But do you know what the floor plan looks like today? Did you ever know if you've never been in there? It wasn't being provided at the time. What's the title? There were some controversies around title. What exactly is going on? What are those controversies? We investigated it, engaged legal teams, and presented that information so you can make an informed decision. Who exactly is, the real owner of this project? Is it Zenith? Did they buy, or is it UPDC? These are basic information. But can I say that it's not about how sophisticated, it's actually about how simple. Just simplify, demystify, and just clarify. That will separate developers. When I speak with a lot of stakeholders in that particular aspect, developers, members of Redan, getting them to understand that addressing the tough questions up front will put you ahead. That alone makes a massive difference. As you said, it's not the fancy gates, it's not the finishes, it's not all of that. It is the integrity of the structure, and it has a name. It's governance in business. It's what are the things that we've put around what we're building. You have a developer who's developing 50 estates. What is the source of his capital? And at what point does it become a Ponzi scheme? We need to understand where that capital is coming and how far it can go. Those are simple questions that real astute investors ask. They want to know, is there political exposure in this project? So you asked a PhD question. I hope you're getting a PhD answer. I will stop for now.
Absolutely awesome. Awesome. Okay, Oduayo, back to you. So the ladies and gentlemen, the questions get more high level. Nigerians' housing deficit exceeds 20 million units. Yet projects struggle to achieve absorption, velocity. Where is the mismatch that we see in this market? Is it product design? Is it financing structures? Or purchasing willpower realities? Please explain to the House.
Okay, so that is PhD question, right? So it's a good question. And I would say it's a structural problem. We have a lot of demand for housing, but what we are talking about today is effective demand, which are two different things. Everybody needs housing, everybody wants housing. Like some developers say, every home buyer wants a jacuzzi. Every home buyer wants a jacuzzi. But can you afford a jacuzzi in your bathroom? Do you even need a jacuzzi in your bathroom? There are two different things. So we know about some facts that affect the industry. We know about the high interest rates. We know, well, that is now coming down. Thanks for that insight, Tola. We know about the high construction costs. The cost is the cost. There's no affordable cement, there's no affordable reinforcement, and so on and so forth. So where is the problem? We have a lot of demand, but we don't have a lot of uptake. First and foremost, we need to realize that the income levels in Nigeria is very, very poor. It's very, very poor. I tell people that forget about the interest rate of mortgages when you find them. Give the guy interest free. He can still afford to buy the house on his salary. He can't. Minimum wage today in Nigeria is how much? 70,000, 75,000, 80,000. Give the guy 20 years to pay for a house of 15 million or 20 million, interest free. He can't afford it. So we need to start to look at this structurally also to be able to resolve the problem at different segments of the market, as we have discussed. Some segments of the market don't need help. The luxury ends of the market, they will look at the investment in its own merit. Does it have the right title? Does it have the right economics? Is the location right for them? Is it in line with their lifestyle, and so on and so forth? Return on ego, return on emotion, all that rolled together would form the thesis for that investment. And those people are, you know, someone said some time ago that the capitalist is cold-blooded. And that is the truth. That's just the way he is competing against houses in Dubai, South Africa, and Kenya. He doesn't have any emotions about your own investment that is subpar. He doesn't have any emotions about your own investment that is subpar. So in that market, there's sophistication. And when you go down, so in that market, there's sophistication. And when you go down to the middle income, it's all about the creativity of the developer to.
They are the developers. 80% of our land first is 6 units of flats for one of the companies. And I thought we were going to do a lot of work. Believe me, we didn't step out of our office. Because they had done so many developments that they had a long list of people waiting. And as soon as they started this development, we just had people dropping 40 million naira checks. At the point in time, I had to say, wait. What's going on here? People were just dropping checks. We didn't, well, the eventual thing was that they now negotiated my fee down because they said I didn't do any work. But that's, coming back to the question, I think the people who have problems are usually the small developers. Yes, if they go in and take a facility, which very few of them do, because they don't have the clout, they don't have the structure, they don't have the organization. Even those developers are one-man businesses. The guy can develop to a certain stage and go on holiday for 6 months. You know, so they don't.
Banking, there's also how do you actually institutionalize so that you can attract capital market, which is enormous, right? So let's begin to think along that path, and it's about ensuring that we have the right corporate.
And how can high-end projects still contribute meaningfully to city productivity, infrastructure optimization, and the broader economic value creation? Thank you.
Okay. First of all, I'm going to ask you to repeat that question, but not just yet. there was something that you asked, Mr. Chudi, and I really want to make this point. You cannot underestimate the value of a good valuation. You can't. Pardon the pun, it was completely intended. And I know from experience that the project that we developed in Eco Development for, was on Eco Atlantic City, land was valued 3-4 times. The land has been valued. The whole of Eco Atlantic land has been valued. Individual plots have been valued. And when Eco Development Company was about to start its project, Azuri, a valuation was placed in advance. This is what's going to be worth. Halfway through the project, the bank came back. What's the value? A valuation was done. And at the end of it, because we had different kinds of capital, obviously we had equity, we had shareholder capital, and then we had 2 different kinds of loans. We had direct loans, and then we had what you call drawdown loans. Okay, we'll put this. I'm all for affordable housing. I'm all for it, and I will never knock it in a million years. However, one of the things that builds a country is its tax base. The people who pay the tax, or should be paying the tax, are often the rich. That's number one. They have the businesses, they have the companies, and they also deserve to be able to buy here something that they would be proud to bring their international friends and investors and even their Nigerian friends and investors to their property. That's number one. And that would give them the same kind of value or return as, and wouldn't necessarily mean that they have to go and spend their foreign exchange abroad. And then I say to people, okay, London has the East End and it has Knightsbridge. New York has Manhattan and it has Brooklyn and Queens. So wait, Nigeria, Lagos, does not deserve to have Eco Atlantic City and Moe. Okay, Moe isn't quite Lagos, but you understand what I'm saying. So now, not only do they pay the taxes, or you can tax them if you have a proper tax base, and they have the businesses, they also, like some we know whose name we will not mention, that's down the Lekki corridor, who has helped us with fuel, provide jobs, paying jobs for many, many other Nigerians who hopefully can then have the finance base to take those single-digit mortgages. So I don't have, anybody who knows me, I don't live in a luxury accommodation myself. I will happily sell it. I will happily, and I will make no apologies for it. Every single person has the right to the property that they want. Now, the other thing about luxury apartments is this. You will find that those who are going to develop luxury apartments, no matter where they are, will either demand the luxury quality infrastructure from whoever is supposed to provide it, because otherwise they can't sell their property. So you will find the Baudillons and Alexanders and Gerards of this world being properly dualized and beautifully maintained in order that the number 4s and the number 29s can be built, and the cuddles and co and co and co. And then if you take somewhere like Eco Atlantic City, for example, which for those of us who grew up in Lagos, recognize that it's not much longer than what was the original Bar Beach when we were too young to walk to the waterside and needed a donkey, compared to what ended up just before they started. The first thing they did was the infrastructure. The first thing they did was the infrastructure, because they recognized that if they want to bring in those people to buy, those people don't want to leave a slum neighborhood and then just enter their gate. No. They want the lifestyle. They want to be able to go for a walk and all of that. And so that infrastructure was the first thing. And they didn't stop at roads. Oh no, they built the water system. They built the electricity power system. So you plug into any property, and I'm not just talking Azuri, any property on Eco Atlantic City, and you literally, as a developer, plug your sewage system in your building to the sewage of the city, plug your electricity to the electricity of the city, and you don't have to build your own road. You don't have to soak drop your own borehole. You don't have to make your own soakaway. You don't have to be your own local government area. No, you don't. You just plug in and play. And that's what happens elsewhere. So we now in Nigeria have what I consider to be an international smart city within a growing metropolis that for me just heralds the way it should be. And I know that there are others, like there's Lackaway, there are many. UPDC has done it where they've provided those things centrally so that when they take light, you can roll over. Somebody else is switching it to the alternative system. Not you. You're not shouting down to Musa to put on the generator and worrying about Yusuf who didn't bring your diesel. And when we then think in those terms, if you're able to just chill in your house, you're not stressing, you're not sweating the small things, what happens? Your productivity rises, the output of your company rises, the income rises, the tax that is paid back to government rises. Do I continue?
Perfect, perfect. So Udo, this one is well curated for you. Branding increasingly determines pricing power. Can Nigerian developments command global premiums without world-class facilities management and, of course, governance structures?
What's higher than PhD? The short answer is no. The extended answer is we wouldn't want to, or they shouldn't want to, because we're increasingly playing in a global economy, as has been very clearly established here. And so competition for capital and investments, beyond the sentimental, personal use and what you may refer to as cultural connection to particular locations. Beyond that, capital is really about returns. And of course, individual, profiles and, whatever it is that you're designing for. So branding brings interest, but it doesn't sustain investors. It doesn't sustain users. It is the fundamentals. And, my sister, Mrs. Erejo has, Mrs. Gbadebo, has really been very clear that at the end of the day, infrastructure is the starting point. In fact, I dare to say that in places like Nigeria, infrastructure equals to luxury. The quality of your infrastructure speaks to the branding language. And that's why, at our company, when we work with developers, what we work on is we ask questions. Who are the contractors? Mm-hmm. What brands are you using for your appliances? Who is doing the piling? Because guess what? It is all those inputs that create a brand. A brand is not glossy paperwork. A brand is that you are curating credibility and communicating it so that people then have trust. Trust is earned. It's not just spoken. Trust is demonstrated. It's not just, what is beautiful and what is attractive. It is what is sustained long term. So the theme of this conference is about smart cities. So whether we're building smart cities or we're building development, the question is, what is the underlying foundation? What is the vision? If we always use, Dubai, UAE as examples, but 2 weeks ago I was in China and I was like, oh my goodness, it was my first time there. I didn't even go to the biggest cities. I went to the third biggest city, and when I arrived back in Dubai, honestly, I felt I was arriving in Benin or Ibadan. That is seriously, China is that far off ahead. No UAE person should hear me, but seriously, that's where they're trying to go. But even the Dubai that most of us refer to is not the bricks and mortars, it is the vision. It is what are we solving for? And Nigeria, we have the makings of it with the quality of, the humans on this table, leaders here, the quality in this room, the quality of, every now and again we have some good leaders in the mix of what we're building towards. Branding is about thinking. That's why we talk about intelligent real estate. It's the quality of the ideas and the problem you're solving for and how strong and solid you want that to be in the long term. So your infrastructure matters. The questions you ask in today's world, we're going higher and higher. So we're going vertical buildings, 25 stories, 50 stories. Some people are boasting of being the biggest building. But there's a big difference in living in a villa in your kingdom, thy kingdom come, versus now you are in a community of other humans. Did the developer think about that? What are the housing association regulations and rules? What is the governance in place for how these people now engage over time? You'll be amazed how many people don't think about those things. We talk to developers, including those developing in Victoria Island, in the high, in the luxury premium locations, who have not actually done what we refer to as intelligent design. So branding, yes, what people refer to as branding, you advertise, the glosses, you have the events, you do all of those things. It can create the interest, but when people interrogate, it very quickly falls apart. That's why we can have buildings falling down in places like even Ikoyi or wherever. Because you can communicate, you can have the friends, you can have the people who will quickly buy, but what happens in 15 years, in 50 years, in 30 years is what branding really is about. That's why when you go to Dubai, you go to Singapore, you go to China, those are brands that have been built with intelligent thinking, intelligent design, and with the future in mind. So to just, summarize, the answer is no. We have to start thinking and designing cities, buildings, developments, communities with intelligence.
Okay, so I have 42 more questions. No, only joking. We have 5 more minutes, so I'd like to go around my panelists with 2 minutes each, just on the on our panel topic. Let's just have your final thoughts. Developing on that discipline, building assets that capital can fund. So, Oduayo, let's start with you. 2 minutes, final thoughts. Thank you.
Okay, so my final thoughts will just be to highlight what I believe access to capital and the discipline required to sustain development is all about. So first, I believe that we need to build ground up. We need to collaborate more, because I don't think one single party has all that it takes to be able to mobilize all the capital that is required to solve this problem. Is it 20 million or more that we are referring to, and other sectors of the industry? In recent past, people have collaborated more, on JVs. People have pulled capital. People are talking about collective investment like REITs. People have also done crowdfunding and so many other structures that we can now optimize in pooling capital. These days, there is almost a democratization of capital pooling around the world with technology. And that's something that we haven't touched a lot on today, but is very, very key for the future. We should be able to attract capital from everyone and from anywhere in the world, given the kind of transparency to information and transparency to technology that we have at our fingertips today. On your phone, you can invest in almost anything in the world in any location. Why don't you be able to do that for optimization of raising capital in Nigeria for real estate? So I believe collaboration, credibility of each and every one of us in the value chain is key. Making sure that your track record speaks for you and you are able to deliver time and time and time again you continue to attract capital in the long run. Thank you.
Awesome, awesome. Mr. Chudi Ubosi.
Thank you. Let me say that, we've talked about an era of capital discipline. I think one of the things we need to be clear about, or maybe not necessarily clear about, but there's capital. There is capital. If there was no capital, MMM would not get the trillions that they're taking off people. There's capital. The problem is when people come to Tola, for example, they're not ready. They just want to, look, we have this land in Ikoyi, we're doing 24 flats. It will sell, it will sell. The market is very good. We'll sell. There's no problem. They're not ready. There's a process, and again, I go back to what Mr. Guniro said. There's a process. Approvals, title, your design. Mr. Kunjo said things about infrastructure, services, your research. Will the market take it? It's very key. When all these things are in place, you'll find that funding a lot of your projects become a lot easier. And things like, we're talking about things like title. We need to begin to free up a lot of the land that we have. I go back to one of the things I said earlier, that less than 10% of this country is titled. We're sitting on so much dead capital. These lands have to come into play in the entire dynamics of the real estate value chain. When this is done, you'll find that a lot of things that we're here discussing today will be easily dealt with. But in terms of capital, believe me, capital is available in this country. And I say that from the perspective the problem is who wants it, what do you want to use it for? And I want to round up with, just add to something Mr. Kunjo said. Capital goes to where it can also exit. It must be able to exit. It's not about offering me, what does MMM offer? 100% in 3 months, and then I can't get my money back. Capital goes to where it can exit. It's not about your high interest rates. It's not about your whatever. I want to be able to leave when I want to leave without stories. So there's capital. Thank you.
Thank you, sir. Tola.
I think I'll piggyback on the last two contributions. I think we've built a lot in the past. When I say we've built a lot, I think this industry has evolved. 20 years ago, we didn't have this kind of forum. And there has been several forums, so the kudos to the real estate ecosystem. It's improving every time. So I think we need to take stock of what we've been able to achieve and take the lessons. But what is clear is that the sky or the pie is huge. Before coming here, I was in a forum where we were being questioned and tested to actually go and reimagine what we're trying to create. So I think that's where we need to start from and really believe. Mr. Judy mentioned the fact that there is capital. But how do you aggregate that capital into productive use? I was speaking with Mr. Urimalade earlier on. So what I'm talking about what we've done in the past. What actually did it in that past was offshore capital that believed in Nigeria, and they created some things that we've seen. Now those assets have transferred to, and I believe it or not, to local hands. But there's a question, because I'm seeing that gap post-COVID. Where are the new development across all asset classes? There is the capital, but who will take charge? There's a gap there. And we're beginning to see other institutions galvanize. So there are different types of. In this room, we've talked about the developers, but there are different capital aggregators. There's the investor, the financial investor, someone that has the money and will just give it to someone to manage. There's also the developer that pulls it together, and then there are the real estate investors, and I think there are even more. There are property companies. So it's really thinking about the different silos and putting them together. And I think for Stanbic, let me market us a bit. At Stanbic Capital, that's the company that I represent, not the bank. Those are some of the roles that we play. Some of the innovations that we've seen our pension market grow, and they have started to invest in real estate. That's the truth. We've seen REITs. Mr. Oguneo was prominent. It was the front. Sometimes the first one will take the lessons, but some of those lessons have been done, and there will be new ones. So we've seen our market evolve, and I think I will just wrap it up at that. But the sky is big. There is that capital. We need to aggregate it. We have to institutionalize it, and we have to create new assets.
Absolutely awesome. Mrs. Gbadebo, your final thoughts.
So my final thoughts. I'm leaving the capital and all of that to capital men. My final thought is to put a challenge to this room. We talk about discipline and we talk about financial discipline, and we're talking about that is what will attract the capital markets. My question to all of us, how disciplined are we individually? Because discipline with finance doesn't start unless you're disciplined by yourself. How are we ready to do the due diligence on the little projects? There's an old adage that says, out of little drops of water, a mighty ocean is built. So to the young people here, because I'm at the end of my own career, I can go and retire. In fact, I'm retired on a Stanbic pension, if I want to say. But on a serious note, though, you cannot learn discipline in your old age if you don't start it from when you're young. Do you do your due diligence on every project? It doesn't matter how big the project is. Azuri is a huge project. It's arguably, I think, probably the biggest in the country for what it is. We've got the tallest residential towers. It's mixed use with one of the tallest office towers alongside. We have everything from fire right down to fire engines. We have them all. But you can't do that. That size of project started in exactly the same way as if you're building a one-bedroom house, with a thought, with a design, with the correct building. So if you think projects, they all follow the same thing. So if you think discipline, it all follows the same methodology. So individuals, we are not, I wouldn't say we are the world's best on discipline. We tend to think of it as something outside of ourselves, something we'll do tomorrow. No, be disciplined completely, down to what you eat, how you talk, everything, because that then brings in a fundamental and a deep-rooted understanding of discipline with other people's money and other people's projects. So that's the first thing I want to say. And the second thing I want to say that hasn't been mentioned here. 37 men in this country own the land. And that's only because there's no female governor of any state. So we need to go back to them. Governors, title your lands. Don't just say that our own is to sit there and collect money for governor's consent. No. I know of one state, I don't know whether they've done it in real estate, but the kind of things that the governor is doing for his state, I think is Abia State, they're asking others to emulate. In fact, there's the third thing I want to say. So, coming back to this issue of land, and the reason real estate, the ecosystem of real estate has grown so big is because there has been a recognition from a long time ago that actually one of the real value adders, if you pardon the lack of grammar, I haven't had my coffee, guys, is the fact that real estate adds to the GDP of any country. Real estate is one of the biggest. I mean, we all think oil and gas, but when you look at the GDP, oil and gas is 4 or 5. Real estate is higher. It's 3. So real estate is huge. It's absolutely huge. It's tangible. Your asset doesn't evaporate in what's it called in the gas flares in Port Harcourt. It doesn't. Your asset is tangible. So that's why real estate is really, really important. It's absolutely important. So that's the second thing. Governors, please, can you title your lands so that people are not at the constant mercy of all the owners of the land who will make you pay 1,000 times. And then the third thing I would love to say, and this is to me as a mongrel Nigerian who is neither Yoruba or Igbo or Hausa or anything, just a Nigerian. Can we be Nigerians first? Rather than Igbo or Hausa or Chekiri or half or mixed breed, can we just be Nigerians? I would love if we decided that Nigerians are from where they are born rather than from where their father is. Then you will find some Chukwudis who are from Kano and some Harunas who are from Lagos and so on and so forth. But the point I'm trying to make here is that we have one country. I don't care how you cut, slice, or dice it. It doesn't matter where you go and spend your money. You will be judged as a Nigerian. Nobody cares what village your father's father and mother came from. They don't care. So as a Nigerian, let us invest in our own country. And I'm not talking invest real estate, although I know that's the theme. I'm talking invest your time, invest your integrity, invest your thoughts, invest your taxes. Invest. Be proud of your own little sphere of nation building, because that then spreads. And my sphere of nation building will intermingle with my sisters over here, will intermingle with his, and little by little I mean, these are all my friends, let me be very honest with you. It's a very incestuous panel right here. I've known each and every one of them and respect each and every one of them and have fought with each and every one of them and different, except you. That's because we're women, aren't we? But do you understand what I'm trying to say, guys? I'm trying to say it starts with you. Or as Michael Jackson so eloquently put it starts with the person in the mirror. So that's my last thought.
Awesome.
Thank you.
And the last
I can
but
see
not
they
the
want
least,
to shoot us off the stage. So, I'm
Mrs.
going to
Okonjo.
be as quick as possible. Thank you so much, for this conversation. It's been really, really insightful and enlightening. I'm going to pick up from some of the things that I've heard, which actually leads into what's quite heavy on my heart. That real estate property is actually for everybody, no matter who you are. The most significant asset you will ever invest in terms of value, cost, all of that. There's a Hebrew proverb that says, he or she who does not own a piece of real estate is not a man or woman. What then that means is that, and if you look at all the economies, you also who earns an income can actually think of owning real estate in a credible future. You don't do everything in one day, but can I at least aspire towards it? I feel it also makes human beings honest. if you live in a home for 5 years, 10 years, 20 years, because you built it with your hard work and sweat, everything is tied to it. It's your address, it's your bank, it's your everything, right? I'm talking now at the base level. Until we do that, we're really like refugees, really and truly. So the real conversations around smart cities, around property investment is really, how can we democratize it in a practical way? I think that's where now the vision comes. Countries like the UK, if you go to communities that are even in highbrow areas, they have designed so that nurses, policemen, certain levels of workers can live around those communities. Because guess what? They serve Ikoyi, they serve Chelsea, so they don't need to travel 3 hours to come. So we're building Eco-Atlantic, we're building Banana, we're building all of these places. Where are workers coming from? How are we designing for that? So I just want to land this on thinking from the user point of view, from the human point of view. We cannot design smart cities without thinking of our humanity, of the citizens, of the humans who use real estate. Thank you.
Thank you so much.
Thank you very much. A round of applause for our panelists and our moderator. Very quickly, we'll take a picture with the publisher. I'd like to invite Mr. Frank Aibogon to the stage and the commissioner. While the panel session was going on, our very special guest walked into the room. I'd like to recognize the presence of Honorable Moruf Akinderu Fatai, who is the Commissioner of Ministry of Housing, Lagos State. He's representing the Governor of Lagos State, Mr. Babajide Olushola Sanwo-Olu. A round of applause for him. Also, with us here is the Minister, or the Honorable Commissioner, Ministry of Physical Planning and Urban Development, Lagos State, Dr. Oluyinka Abiodun Olumide. He is represented here, I think. All right. Yes. Thank you very much. Welcome, sir. Yes. We'll get right into the next session. The next thing, we'll be getting a goodwill message directly from the Office of the Executive Governor, Lagos State. This message will be delivered by Honorable Moruf Akinderu Fatai. He's the Commissioner, Ministry of Housing, Lagos State. A round of applause as he makes his way to the stage for his goodwill message. Please keep clapping. Keep clapping. Thank you, sir.
Good afternoon, everyone. I'm here to represent Mr. Governor, who would have loved to be here. He sent his apologies and an address that I will read on his behalf. The publisher, BusinessDay Media Limited, Mr. Frank Aibogun. HC Physical Planning, Dr. Olumide Abiodun Oluyinka. The PS Physical Planning, Engineer Olumide Shotire. Chairman LBIC and CEO Ezima Realty, Mr. Hakim Ogunero. The chapter president, FIAPSI, Nigeria, Mr. Akin Okpatola. Distinguished guests, gentlemen of the press, ladies and gentlemen. It is an honor to stand before you today at the 2026 Business Day Property and Smart City Conference, themed Property Investment in an Era of Capital Discipline. I commend BusinessDay Media Limited for convening this important conversation at a time when cities must think more carefully about how capital is deployed and how value is created. This theme speaks directly to our present reality. Across the world, and here in Nigeria, Capital is more cautious, financing costs are higher, and investors are prioritizing certainty, transparency, and long-term returns. Capital discipline, therefore, is not simply about spending less, it is about investing wisely in projects that deliver economic value, social inclusion, and environmental sustainability. For us in Lagos, this moment reinforces a principle we have consistently upheld. Growth must be structured, not speculative. Real estate and property investment remain vital to our economy. The sector creates jobs across the value chain, from architects and engineers to artisans and suppliers, while stimulating demand for locally produced materials and supporting small businesses. More importantly, disciplined property investment helps close our housing gap, improves living standards, and strengthens urban resilience. However, in an era of capital discipline, investors are no longer chasing short-term gains. They are looking for clarity of vision, predictability of policy, and alignment between infrastructure and development. This is where government must lead. In Lagos State, we recognize that capital discipline must begin with us. We are strengthening planning systems, digitizing land administration, and improving transparency in approvals to reduce uncertainty and transaction costs. We are aligning infrastructure delivery with growth corridors so that road transportation networks, power, and digital connectivity support where people live and work. By doing so, we are creating an environment where responsible investment can thrive with confidence. Our commitment to affordable housing reflects this disciplined approach. Through public-private partnerships and innovative financing models, we are promoting mixed income development that are both socially responsive and commercially viable. We believe in affordability and profitability are not opposites. They are in partners in sustainable growth, urban growth. As we discuss property investment, we must also recognize that the cities of the future will be smart, resilient, and data-driven. Smart city initiatives in Lagos, including intelligent transport system, digital mapping, and data-informed urban planning, are not about technology for its own sake. They are about efficiency, risk reduction, and better decision making. When infrastructure is smart, capital works smarter. Equally important is our commitment to sustainability and climate resilience. Lagos is advancing flood mitigation, coastal protection, and green infrastructure while encouraging energy efficient building practices. These measures are not merely environmental choices. They are safeguards for investment and insurance for the future of our city. Distinguished ladies and gentlemen, this year represents the final full year of our administration. It is a moment of reflection, but also of consolidation. Our legacy will not be measured by the number of projects initiated, but by the strength of the systems we have built, systems that promote transparency, discipline, resilience, and inclusive growth. We are laying the foundation for a Lagos that remains competitive, livable, and investment ready long after this administration. Let me assure you, Lagos remains one of the African most compelling property investment destinations. Our population growth, entrepreneurial energy, and economic dynamism continue to drive demand. But demand alone does not sustain growth. What sustains growth is structure, what attracts investment is stability, and what guarantees returns is discipline. I therefore urge all stakeholders, developers, financiers, regulators, and urban planners to see discipline not as a constraint, but as the foundation of sustainable prosperity that will ensure that we continue to build cities that are smarter, investment that are wiser, and a property market that is stronger for generations to come. Thank you, and I wish you a productive conference.
Another round of applause for Honorable Commissioner. Thank you very much, Honorable Maruf Akindaru, for that very warm address. Right now, we'll take a presentation. We'll take a presentation from My Ace China, the founder and CEO of the Mayor of Housing Limited. Presentation will last for 15 minutes. 15 minutes. Do we? Okay.
Something big has hit the city of Port Harcourt and about to quickly spread throughout Africa.
I would like to stand on existing protocol because I don't know the protocols that were established. Because I came from the Niger Delta and your blue and red rail does not get to the Niger Delta. So I came in a little bit, few minutes behind the schedule, but I was happy I met the speech of the Honorable Commissioner. And I like the faces I'm seeing, but I don't like the energy because when I came on stage, nobody seemed to have clapped for me. I want to know what I did wrong to Lagos. Did I do it in Port Harcourt? I did it here. So thank you very much. I have 15 minutes, and in 15 minutes, I'm going to try and just stimulate our thoughts because talking about property investment and smart city development and curating, it's something that if we want to dig deep into it, I don't think a one-day conference will be enough. For those that don't know, my name is My Ace China. I'm a real estate success strategist and the Mayor of Housing. The Mayor of Housing is my registered trademark and my registered responsibility as one of the persons that has decided to blow my trumpet in Nigeria, because when people buy trumpets and they don't like to blow it, why do you have a trumpet if you don't want to blow it? Why did you buy the trumpet? I bought the trumpet in housing, especially resilient, sustainable, smart housing, because I know how good this trumpet is. I know how well I can blow it. And I don't just want to blow it, but I want to inspire all the trumpeters in the house to don't allow the diaspora or other climes to define smart for us, to define the tune of the trumpet for us, to even decide the quality of the trumpet, to decide the standard of the trumpet, when before they were, we were. So I'm somebody that is blowing a trumpet of international standard, but very local aboriginal origin. And I'm not just a real estate developer. I call myself a strategic urban resilience architect. Because here at the Mayor of Housing, we don't simply build estates, we design resilient urban systems for Africa's future with Africa's past and history embedded in the transition and renaissance of that future. Our work integrates both climate, smart infrastructure, energy independence, because for those that understand smart, the energy of thought is more important than thought. And that's why when you hear of AI, their data centers and the energy they consume is more important to the backbone of AI than AI itself. So energy independence is very important for us. Strong government and governance framework, economic clustering and economic viability, because cities must not just house people. Driving through through to this place, I saw the popular 1004, and I was telling my assistants that this used to be one of the most popular things in Lagos. I hated using that adjective, used to be. When can we have a 1004 that will be one of the best places in Lagos and will be that for the next century? Those are our thinking and those are our thoughts. And please, somebody can just volunteer. Once it's 12 minutes, wave, and I'll round this up because I have the content, the capability, and the passion to speak on this for the next 15 years instead of 15 minutes, and I can still do it in 12 minutes. So we are here to engineer your next thinking. If you see the first slide in my presentation, it talked about stimulating simple, sustainable, smart cities. I'm here not to give a presentation. I'm here to stimulate your thinking, and I'm hoping the thoughts I stimulate in these 12 minutes will be able to precipitate through your rumination on those thoughts perpetually smarter property investment procedures and thoughts that will re-engineer a city that is truly smart and truly African smart. So before I go into some things I just want to quickly browse through, I'm here to just ask questions that will make you rethink what smart is. If it is dumped on us by somebody that has never lived in Africa, that developed it because it is called technology, is it smart? I thought you guys forgave me for what I did. I asked the question, is that smart? If it just has to do with electrical gadgets and electronic gadgets that open and close, obey commands, but require an energy framework that we don't even have, but we deploy them because we hear some people create the narrative that that is the trend. Is that smart? If it is developed in such a way that 98% of our markets lack access to it, is that smart? I'm not very smart, but I am an Igbo-thick prince of the Niger Delta. My Igbo is so thick, if you put it in water, it will turn to Agidi. And the Igbo man will tell you, if he does not sell, it's not business. We are caught up in a transition period of the conundrum between scarcity and demand, where we think because of the scarcity of sustainable smart housing in Nigeria, the dire scarcity creates a pseudo demand for the few people that are delivering that product to confuse us that we are doing well. But the 95% confidence limit shows that if 95% of people cannot access it, we are not doing well. So I know I didn't read marketing in school, but all Igbo people know how to sell. And all Igbo people might have what they call in Igbo, Oro Igbo is salary. Oro Igbo is selling in the shed. So my shed, I learned 3 things called the window of marketing: availability, visibility, and accessibility. So if the materials are not available, is it still smart? I have to stimulate our thinking, because today there's something I call in Africa walking on gold. Because my principal quote for housing is that the wealth of the earth is the earth. You either build it, steal it, or mine it. Everything in this hall, this mic I'm using, the clothes you're wearing, the food you ate, everything comes from the earth. And we call the earth real estate. And one of the people that has more earth that they know what to do with is Africa. Is it smart to use cement that we have no control over, or to go back to find out the full potentials of clay? That the Egyptian pyramid was built with clay. And they are still standing as a testament that a little stimulation of our thinking. Sometimes the difference between innovation and obsolete might just be 1% improvement into what was. So when you hear innovation, don't think you need to reinvent the wheel. You just need to find out what works or what worked. Find out why it worked. Adapt it into our contemporary time and make it trendy again. And if to work with accounting the basic needs of the time, it will now sound like a smart innovation. I would have gone through all the academic presentation and the slide, but we'll just come here and I'll bamboozle you with my presentation. But I want to stimulate your thought for you to bamboozle yourself with your thoughts. Mortgage and thrifting. Which is smarter? Mortgage, you know the word mortgage has to do with mortality and gauge or cage. So it means death for life. I was born, or death until death. That sounds better because death for life, you might not be alive to pay the debt. And death and death sounds similar because I have a quote that says they sound alike because bad death will bury you, while good death will bury your taxes. So death and thrifting. Please, I have 3 more minutes to round up. If Yoruba, Igbo, Hausa, Ijo, any tribe of Aboriginal Nigerian origin that had any mortgage system where people acquire things and then pay later, aboriginally from your culture, raise up your hand. Any tribe that people do contribution, age grade, and then do ajo, esusu, isusu, and people thrift to achieve a target, raise up your hand. So if I offered you thrift housing and offered you mortgage, which is smarter based on Africa? Now, I'm not here to bamboozle you because as far back, I was born in 1979. Between 1965 and 1979, the testimonial of cooperatives and thrifting was standing tall in Nigerian soil with the cocoa house in Ibadan. That was the first skyscraper not built on the back of steel of Andrew Carnegie and all the steel giants in the US that supplied the steel, but built on the back of cooperatives and thrifting that came together as the cocoa cooperatives that put together a thrift thinking to create that vision. And I leave us with one thinking because I promised myself I won't speak for 15 minutes. So when they gave me 5 minutes more, I laughed. I said, I'll do 2 minutes more. The thinking is this: the only thing that has threatened God, the Creator. I'm a very God-fearing person. But in my study of the Bible, the only thing that has ever threatened God, ever, is real estate. But not real estate dumbly done on the back of disintegrated, all scattered, all individualistic, all no policy, no unified policy. But there was a thinking that the Bible, God himself admitted that his greatest creation created a superlative creation called the supermind. Because it was Napoleon Hill that said that when two minds come together, a third mind that is greater than the summation of those two minds is created. So when God created the mind, he didn't know that the unity of one mind can make the vision of a people so impossible that even him, God, cannot stop it. The only way he could stop it was to scatter their minds by scattering their language, and they could not understand themselves. So he scattered their understanding and comprehension. I'm hoping today with these thoughts, not only will I galvanize us to start thinking again, but maybe through the commissioner and His Excellency is representing, maybe through Business Day, we can begin to have a pool of minds that one day, one beautiful day, we'll go back and become like our ancestors that realized long time before I was born that the best competition is collaboration. And the greatest collaboration is the collaboration of thinking that will not only make our cities smarter, but will make them more resilient. That day, I hope, will happen in my lifetime. Thank you very much.
Thank you very much, Mr. My Ace China, for that presentation. We would like to recognize the presence of the Permanent Secretary, Office of Physical Planning, Lagos State, Engineer Olumide Shotire. Are you here, sir? Welcome, sir. Thank you for being here. Thank you, everyone, for being here up till now. We have a couple more things to do, but I assure you that none of the value that is going to come out of the next few sessions would be missed. You do not want to miss any of it. Please exercise some patience. We've heard about patience a lot. Please, let's start practicing from now. All right, so the next thing we'll take right now is the keynote address. The keynote address will be given by Dr. Oluyinka Olumide, the Honorable Commissioner, Ministry of Physical Planning and Urban Development, Lagos State. A round of applause as he makes his way to the podium. Thank you, sir.
I say good afternoon to my dear brothers and sisters here seated today. I also want to believe that a very good protocol is already established, for which I would also like to rest upon. And in order not to take much of our time, I will try and be very, very brief. And what I intend to do is to give us an insight into what we in Lagos State we've been doing as a way of changing the landscape of property investment. And of course, I'm also sure you can also agree with me that Lagos is actually taking the lead. And as God will have it, exactly 1 month ago, 24th of January, the Oba of Lagos bestowed on me the title of Are Atunlutu of Lagos. And today's event is going to be the very first outing for me after that title. And if you want to clap, clap. On that day, KBC said 6 of us were given title that day. And he said, of these 6 people, You can quote me authoritatively. The Oba will confirm it. The other 5 had to lobby. But this boy is somebody that I personally, I'm quoting his word now, is somebody that I personally study, and I feel and believe that I should bestow on him that title because in his own small way of doing things, he has a magic hand of changing the ways of things. So today, I want to share a bit of that magic hand into what we are doing in Lagos, which of course I believe will amuse you and gladdens your heart that yes, the state is actually taking charge. I'm supposed to talk about building investable cities through planning certainty and institutional trust. And I have, unfortunately, it could not be presented on slide. I don't know where my PA is, but I will try and make it interesting. I'm starting with setting the context of city investment and confidence, which I believe majority of us here we are here for. Because if you don't have trust and belief in something, you will not endeavor to invest in that thing. So we as a government, we have to show you what we are doing, what plans we've mapped out to cement that your belief, which of course will lead you into investing your capital. Now, but what exactly is a city? If we Google it, you will see, which is just an enclave of people determined basically by number, highly populated. And they must have one common thing. Yesterday, my ministry held what we call the Ramadan talk. Muslim, but in Lagos, there is no Muslim, Christian, we're all together, we're all one. And the imam that gave the talk, it was on neighbors. And he said, I think he came from Mekiti or somewhere around that place. He said, when he wakes up in the morning, he will have to go around the street and greet all the neighbors. Those are quality of neighbor. But somebody now asked question that, sir, I live in an estate around Oniru, and I don't even know the next neighbor. Is that not a quality for Lagos? And of course, it's part of qualities of advanced cities because everybody will tend to mind their own business. And what is paramount to them is actually the goals they've set. It's not whether I'm saying good morning to my neighbor or the like. So here, to guarantee investors, the 3 key things that will follow in Lagos here, predictability. We must be able to ascertain, to make a right decision. We must be able to predict. If you cannot do that, then the ability to invest will be shaken. You also talk of certainty. The endeavor that we want to invest in must present a high level of ranking in terms of certainty. I mean, for those that did MBA finance, you know, how you rate certainty. If a project is rated low in certainty, then you need to be careful in going into it. However, there is the other leg that also talked about risk. The higher the risk, the higher the returns. That is under a clearly defined certainty. And the last one also is the trust in the institution, which we are saddled with as a government to ensure that we create trust. Now, why is Lagos, why does it matter what we are discussing now? In Lagos, unlike other cities, of course, some other cities are also growing to the status of Lagos. And if we go outside even Nigeria, one key striking thing about cities is that it's always a very, very busy enclave, and people go in and come out. And that's why you have in London, for example, the central area, key of business activity, very turbulent in terms of living because you have to pay through the sky. But you have the opportunity of living outside and you can commute into that city center. But here in Lagos, it's not exactly like that because you have scenario, maybe by virtue of the position of Lagos in Nigeria, if you try and do a small, simple exercise, just stand by the toll gates on a daily basis and try to record the number of influx into the state. You will be amazed with what you see. People keep coming in here, but ability of moving out is not as fast as they said I have 5 minutes. And all I've been talking about is still a preambles. Now, what are the mandates of the ministry? We have the responsibility to develop, to coordinate, and enforce special planning framework. That's our responsibility. And we also ensure orderly development through effective land use, where we come out with our various operative development plans. We are also saddled with the responsibility of promoting sustainable urban growth that supports socioeconomic prosperity. And this can be seen from the preparation of a master plan, model city plan, and development guide. I make bold to say that Lagos State, it's about the only state in Nigeria that is, even Abuja inclusive, that is constantly reviewing their operating development plan, because that is what guides all the developmental efforts that we have. Just recently, we are now trying to have a comprehensive master plan for the whole of Lagos states, in such that we want to bring all the master's plan that we have, we want to bring them together as one single unit, where, for example, you can say, I want to see the drainage routes of the state. You freeze everything and you see all the drainage routes of the state. Development plan as instrument of certainties. Of course, with the plan, like they used to say, not planning at all is also plan. Because if you have an exam and reading for the exam is planning. So if you don't read, that means you're also planning to fail. Meaning that there is nothing we can do in life without plan. And in Lagos State, we have our plans, the sectoral plans that guides our transportation, the housing, and the economic priorities. One of the earlier speakers did talk about plans in Lagos. Like you have Atlantic City. It's not only peculiar to Lagos, it's all over the world. The major city center is somehow difficult for low-income earner to reside. One way out of it is to invest heavily on your transport logistics, whereby, like we are doing in Lagos, you have the blue line, the green line, the red line. We have 7 of them. We're on the 3rd one now. The essence of this is to enable people to commute on a daily basis within a short period of time, that you can live in Songo where your salary can afford and be able to work in a city center like CMS. Institutional trust. These are pillars of development. And what we do in Lagos State, we have the agency that are responsible for all the developmental effort. Of course, the fiscal planning comes up with the plans, which guides the whole development of the states. But break it down into little ones, which most people see as the job of Ministry of Fiscal Planning and Urban Development, which is plan approval. That is, if you rate it in terms of percentage, maybe 6 or 7%. But people are very familiar about it. And it's also part of way of giving institutional trust that we have a process of development in Lagos. And let me just quickly add here, when we talk of property development, the moment as human being you distort the original nature of the ground, you are doing property development. Once the natural state is altered, that's property development. But a lot of effort and concentration has been residential, commercial development, recreational. No, there are lots in terms of property development. We notice over time that, okay, we grant approval and people are left on their own to constitute their development team. And that has led to some errors here and there where you have collapse of building. Again, in Lagos, as form of institutional backup, we have a control team, which is called a LABSCA, that ensures that developments are done as designed and specified. Quite a time you must have noticed they come across and mark X. And it's so because we don't do the right thing. I have developed 76 estates in this country. I can also talk authoritatively as an estate developer. Majority of estate developers don't keep to the approved plan, and this is not good. Planning certainty. Regulations must be clear and consistent. Top developers, before they commit themselves into development, sometimes they go and get development information where from the land use, you have specific definitions of the types of building that can be put in a particular area. That's part of giving certainty. Plan implementation predictability. You can, if you go through our ODPs, you will see areas that is strictly maybe ground and first, area that is ground 1, 2, area that we say up to 75 meter, which is about 25 stories and the likes. Another warning. They said time is up. Okay, let me just run to it. Strategic investments. They are encouraged by what we have the transit-oriented development. Of recent, we have the coastal road, which I'm sure we're all aware of. And a lot of effort is gone into development along that area in terms of planning. And because we don't want it to be messed up. And that, again, accounts for why our leader, the president of the country, has cautioned that we need to be careful along that area. Mixed uses zone is part of it. Green and sustainable real estate, commercial and industrial estate, smart infrastructure. Let me just go on by concluding, since they said my time is up. Planning certainty and institutional trust, if you add the two of them together, gives you investability. And what governs that are development plans, which in Lagos we have. There is nowhere in Lagos today that we don't have plans for. The last one we are working on are the water riverine areas, the islands. Implementation of these plans, we implement them and we guide development. Good governance, which is being showed by the state. I may bold to say that about 7 states in Nigeria have visited us to understudy how we do our planning and development activity in the state. And very soon you will see, I don't want to mention their names now, but very soon you will see them almost doing what we do in Lagos. We also provide strong institution. And collaboration between public and private sector is also very important, which one of them is what you have at the Atlantic City. The investors is today, Lagos is open with planning certainty and institutional trust for your best investment. This I guarantee. Let's build cities that work, cities that thrive, cities that attract capital, cities that take care of people. Together we can build more than infrastructure. We can build investment certainty. Thank you very much. Ìgbéga ìpínlẹ̀ Èkó, àjùmọ̀ gbogbo wa ni o.
Thank you very much. Can we give him another warm hand? That was a very insightful presentation from the Honorable Commissioner, Ministry of Planning, Physical Planning and Urban Development, Lagos State. It's been a very interesting day, you would agree? How many of us are having fun? Okay, how many of us have learned a thing or two? All right, I'm sure our notes are filled up. Well, you know what they say, with great power comes great responsibility. And indeed, from the lineup of speakers that have spoken so far, we can see that they've walked the walk, and they are ready to talk the talk. And speaking of talk, we have fireside chats up next. The fireside chat will be moderated by Mr. Ayodeji Odeleye, the Vice President, FIABC Nigeria. Can we welcome him to the podium with a round of applause? And then the person he will be chatting with is Mr. Okereke Bright, who is the co-founder and COO of Flings Realty Limited. Can we also welcome him with a round of applause?
This is Flings Realty. With over 20 buildings located in the heart of Lagos mainland, 300 plus investors served, and almost 1 billion paid in returns. But numbers are just part of the story. Every project is built with insured construction, and every investment is protected through trustee partnerships.
Good afternoon, rather. I believe the video is meant to cue us in. The media team?
Yes.
Yes, okay, please. Let's us all gaze on the screen.
Okay, great.
This is Flings Realty. With over 20 buildings located in the heart of Lagos mainland, 300 plus investors served, and almost 1 billion paid in returns. But numbers are just part of the story. Every project is built with insured construction, and every investment is protected through trustee partnerships. Because real estate shouldn't just grow wealth, it should defend it. In a market full of noise, we trust systems. In an industry built on promise, we trust proof. This isn't just real estate. This is real estate done right. Welcome to Flings Realty.
All right, please a round of applause for Flings Limited. I'm standing on existing protocol, and I want to welcome you once again to this wonderful session. I'll just go straight to our question because I've been told we have 1 hour. All right, so we'll try to conclude this fireside chat within 10 minutes, God helping us. So, how many of us know Mr. Okereke Bright? Thank you. All right. So, thank you for coming, and we are glad to have you here. Your story says that you started with 50,000 naira. You started real estate with 50,000 naira. Wow. That's amazing.
I can't actually remember. I think we just agreed it's 50,000.
All right,
50,000
naira. I would like to learn the trick how you did that, and then you had 13 failed businesses behind you. Now you are co-founding one of the most talked about real estate companies on the mainland.
Yeah.
So let me start with this. What prompted the vision? Let's start with that.
So I do start with small money, and the way we grew the business was we started as agents. So you don't need a lot of money to start as an agent. You just help people get apartments. I think most of that money we spent it on building a website that nobody used. So We help people get apartment. Then we found out that developers are the ones that have most of the control when it comes to apartments. They determine the price, they determine what the apartment looks like, they determine also sometimes who manages the apartment. So I had a lot of customers complain to me about they don't like the houses. And I mostly did the agency thing in Yaba, Surulere area. And during that period, developers had this thing where if they want to tile, they will tile the parlor and not tile the bedroom. And sometimes they also choose where they put doors and where they don't put doors. And renting those kind of apartments, the customers are yelling at you and be like, why are you bringing me to stupid apartment? The person who built this is built rubbish. And you as the agent, you have no control. So what inspired me going to property development was being able to control how the customers experience their houses. So in doing that, we realized that not a lot of developers were building houses for young people that need studio apartments, 1 bedroom apartment, 2 bedroom apartment, especially in areas close to where people work. Most people work on the island, Lekki, VI, Ikoyi, all those areas, but they can't afford to live here, so they mostly live in Yaba, Surulere, and areas around, and they don't have money for big apartments, so they get the smaller ones. So that's what majorly inspired us to go into development and building houses for those people.
All right. So, if I may ask, yes, you are majorly focused on Yaba, Lagomeji axis. So, does it mean that you left the brokerage aspect, or you still do from
the whole thing? Oh yeah,
the
yeah.
whole
So
spectrum?
we don't necessarily do brokerage anymore, but we still control it. Like so, the houses we built, we try to create rules to avoid people misusing it. So we are not the brokers anymore. We just build. We also give a company to manage it for us. But then when it comes to the renting part, we put things in place to make sure that agents don't do too much with the apartment. Because recently we had a case where house you are renting for like 800 or 1 million, somebody put it for 1.5 or
Wow.
2 million, and then they'll take the money and the client will be angry at you thinking
That
did it.
you did
Yeah,
it.
but we don't do the brokerage and we just
Okay.
focus on building the houses.
Thank you for going to trust and delivery. You just mentioned something about trust. So, Nigeria's property market has a trust problem.
Yes.
From all the sessions we've been having, we've highlighted that majorly. So, but what has Flinks Realty, what have you done to bridge that gap? I know you have delivered almost 16 buildings and over 160 units of housing units. So, how have you been able to bridge that gap of trust and then being able to deliver the unit you have?
I think from the beginning it was clear that trust is very important. So we noticed that everything was a step to the next.
Yeah.
So because of that, we always prioritize what our customers want. So the people buying these properties, what do they want? The people renting this property, what do they want? And delivering what you promise has always been a priority. So we made sure at every point that took center focus. Even when we had cases when in 2022, 2023, when the inflation was going crazy, we had to forgo a lot of profits during that period because we didn't want to go back to customers and say pay more.
Okay.
And we looked at it like if we're able to afford to cover these losses for the customer, would they be able to buy more from us in the future? So we focus more on how best can we deliver what we promise without having to default or go back to customers to explain. And even when we have to do that, because some cases there's nothing you can do, you have to be very forward about it. So long before chaos starts, you reach out, communicate. You also show transparency.
Information.
Yes, information. Give them
Communication.
information ahead of time. Show them what's going on. And we notice that a lot of people are very reasonable when you are very transparent and you communicate what the problem is clearly.
All right. Okay. So we agree with me that Nigeria real estate market is a tough market.
Yes.
All right.
Yes, definitely. Very tough.
And like I said in my introduction, you've had 13 failed businesses. All right. So and most people would have stopped at 5. You agree with me. All right.
Yeah.
So now with the capital tightening across the economy, many real estate companies are struggling. What lessons have you picked from these failed businesses that you've done to help you, to be prudent, to be disciplined in capital securitization and then utilization?
Okay, so one of the major things is always prepare for crisis.
Awesome.
So in the company, we always have this we call crisis fund, and we're constantly putting money there. preparing for a crisis, because a lot of times you don't know what tomorrow is going to bring. So you're just prepared for worst case scenario. So even when we plan projects, we plan it as though, okay, the inflation is going to happen, problems are going to occur. Then you have that plan, and most especially you prioritize delivering what you've promised.
Yeah.
So one time we delivered the project like 3 months in advance of what we told the client the project was going to be delivered. And so was asking me that how were we able to do it? And I told the person we actually just focused on making sure that what we told our customer we deliver it. And because we know that's what we get us to our next level. Because if you fail in delivering 1 unit, nobody will trust you with 2. If you fail in delivering 2, nobody's going to trust you with 10. If you fail with 10, you are definitely not getting to 100.
Yeah.
And if you have planned to continually grow, you have to prioritize making sure that the promises you make, you actually deliver on it.
Alright.
And you make sure you don't have to default on that.
Have you had a situation where maybe an investor, dropped money and said, "Oh, I need my money sharp, 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 sharp"?
Yes.
And how did you deal with that?
So you have to explain to them that's not how it works. Like the money has been deployed already, but we also let them know, okay, this, if you want to put your property back on sale, this is the timeline it's going to take. These are the processes, and a lot of time they understand because they know that you bought a property. It's not like crypto where you have an app, you press button, you get your money immediately. It has a process. If you want to sell it, we always help them sell it. So we also say, okay, if you want it quick, this is the cost is going to come out. It means you have to maybe sell below market price. We put it in the market, you get your money fast, but you're also going to take time. It's not going to be immediately because that's the way the industry is.
Thank you so very much. I believe we are all picking one or two things from this conversation. Let's wrap up with this. What's your vision for the next 5 years, 10 years?
Interesting. So one of the things that we're trying to really focus on is in Nigeria, we have mostly young people. So more than 60% of our population, they are young. And at the moment, I don't think enough people are building for that market because these young people mostly stay in smaller apartments. And I don't have any statistics for this, but a lot of them are not getting married as early as they should. So they are spending a lot more time in studio apartments, 1-bedroom apartments. Single people are increasing, so they don't need much space.
Yeah.
And yes, it's an epidemic now because a lot more people are 32, 35, they're not getting married. So they stay there way longer than you expect. And there are very few houses there. Now, one of the interesting we noticed whenever we build, we've had so many people rent apartments while we are still building.
Okay.
Off plan. And when you have a market where people are renting off plan, like they are willing to wait 6 months, sometimes they are willing to wait 9 months, 10 months to rent because they just don't have enough alternative. We need to pay more attention there and create those houses so that that entire market does not die, so people don't end up homeless. So our goal in the next 10 years is to build more houses like that to provide for that market.
Luxury or affordable?
In between.
In between.
We can't say it's affordable, but just somewhere in the middle. Somewhere in the middle. Yeah.
Okay, so one last word of advice for a new let me say a new developer or an upcoming developer like you. What advice will you give the person? So starting from scratch to where you are now.
Yeah. So interestingly enough, I didn't used to consider myself a new developer because I've been doing it for like 6-7 years. But when I entered here, I saw people and I'm like, okay, I'm very, very new. So let's say somebody else maybe also starting it takes a lot longer than you'd expect. Like most times when you start, you expect it to happen like immediately. You expect things to work out. It takes way longer than you expect. But when it does come, it's worth the wait. And every good thing takes very long time. Very, very long time. If it's taking time, it means you're on the right path. Don't look at other people that seem to be making it, because I've been doing real estate for like close to 10 years now. There are people where in my second year they were blowing up. It looked like they were having fun, making a lot of money, and now they hardly have a business. Wow. So wait the amount of time it takes to build something good, and you would get the quality out of it.
So you're saying be patient.
Yes.
Continue to learn.
Yeah.
The trade, and then okay. So if you are saying 6 years is not young,
It's not something that we can associate with young people like you these days.
Yes, yes, true. We grew up in a different world. So the thing is, we grew up in a world where everything comes instantly.
Yeah.
So most people who are older, before you want to communicate with somebody, you have to send a letter. So
Yeah.
you've learned patience growing up that it takes 3 days for someone to reply
Oh,
your
now it's
message.
WhatsApp.
But for us, it's instantly.
Instantly,
So
yeah.
everything you want, you get it immediately. So you build that habit. So for young people to go back, it's hard. But if you do, the reward is worth it.
Wonderful. So I lead an organization that this year we are celebrating 40 years of establishment. 40 years, yes, 40 years. And yes, my
establishment. Okay,
establishment.
great.
And I can attest to what you have said.
Me? I'm 28. Yes.
Wonderful.
Thank you very much. Thank you.
So, thank you so very much. At least we kept to time. Did we keep to time? Perfectly. Please, a round of applause.
28.
28.
All right,
He's
let's take a
28 years old.
photograph.
He's 28 years old.
We'll quickly take a photograph. Thank you very much. That fireside chat really brought out the crevices of building a property development or a property company at all from the ground up. If you think you've been fed so far, you just wait for what we have next. Thank you very much. We'll be moving on to the second panel and final panel of this afternoon. This panel will be discussing financing smart, efficient, and credible property assets. I would like to call the moderator for this panel, Madam Adeton Tekpola, the founder and CEO of Solid Foundation Group. Give her a round of applause, please. Thank you. And then the first person on our panel this afternoon is Mr. Olurogba. I hope that's a Mr. Urumalade. Okay. He's the principal partner, Rogba, Urimalade and Co. Okay, and the next person is my ace, China. He was up here earlier. He's the founder and CEO of the Mayor of Housing Limited. Thank you very much. And the next person on our panel is Ayolariwaju Kuyebi. He's the MD, Managing Director and CEO of GMH Luxury. Thank you and welcome. And the final, but not the least person on this panel is Mr. Oludari Makinde. He's the Chief Commercial Officer, Q Shelter Limited. Welcome, sir. Welcome, everyone. And we look forward to your discussions. Thank you.
Thank you very much, sir, and good afternoon, everyone. I am very excited that we're still this many in the room. The room is filled, and that's because shelter is one of the most important needs of every human being. And we're all trying to find answers to how we can all get housing. I like what Madam Uju Okonjo said, that the earth is really where everything starts. And that's something I'm very passionate about. I've been in this field for 32 years. And so it's a heart, so I'm very grateful to Business Day for putting this together. So I have very intelligent and well-accomplished men in the room today. And I can assure you that by the end of this, by the end of this session, we would have gotten a lot of value. One of the things I'm hoping we would accomplish is we've been talking luxury, we've been talking capital, and there seems to be a bit of helplessness for young people here. So I'm particularly grateful to Mr. Bright that at least has shown us that, with young people, you can achieve a lot. Everything starts with a dream. And, okay, no problem. Thank you very much. So I would, my first question will go to Mr. Rogba Orimolade. The question is, financiers frequently complain that Nigerian projects arrive at credit committees with optimistic cost assumptions. Where do you see the biggest disconnect between developer projections and construction realities? Do you want me to repeat the question? Financiers frequently complain that Nigerian developers come with a lot of optimistic, estimates when they come for funding. So where do you see the largest disconnect between the developer projections and construction realities?
Okay.
Thank you.
I got it. Disconnect. I would throw out, I think there are about 2 to 3 areas in which I would say brings out, I won't call it the biggest disconnect, but I think it's something very key, and I believe in this room most people relate to. First one is something that was mentioned repeatedly in the first panel, which has to do with infrastructure. I think the right word to use is underestimation of infrastructure and the costs that come with infrastructure. I'll give an example, quick one. I spoke coincidentally to a client yesterday. He's doing a very big development on the Lekki-Ekpe Express. Very big. Most people don't know it because it's not even advertising. But he told our company to advertise. But I just said, wait a minute. This man is not even making noise about it. I called him. What was he doing? He's building. But key thing, the road leaking the development is not well done. He's already doing the road. He reached the local government to do the road. And I called him and I said that you could have factored the cost in. Those are projections. But he said something very interesting. He said, can you really get close projections? Especially when you're dealing with the local governments that in some areas, they insist that they're going to do the road. So infrastructure, not just roads, water systems, and as somebody said, your own local government services. It's been underestimated by parties, and I think it's a big issue. The power issue is also something that's very big. I think Asu Rock, I think in the budget of this year, they made allocations for solar panels. I don't know why typical developers are seeing that and are not thinking of alternative energy already. So those are key costs, and those are key things that I think pulls the trigger. Second one I think you cannot neglect is Forex, the FX issue. Oduayo, correct me. I think close to 70% of our materials we use are imported. 80? Okay, say 70. That's huge. I think they are very unrealistic projections that are given. And most times, those unrealistic projections, the developers know, but they just want to quickly get the money, do the development, and later they face the issues, all that. Also, unrealistic timelines. There's a development commercial we were dealing with last year. We didn't get transformer till the next, I think it was 6 months after the development was concluded. That's the reality. Those are things that I don't need to say here. We can table it, and if we are realistic, we'll bring out a lot of these issues. So I'll say those 3 issues. Then, lastly, let me just say this. Pre-construction. A lot was said about feasibility here. But I have to say this, so my organs are here. People talk of feasibility is barrel and paper. What's the return? Okay, we sell this. What's the cost? Okay, QS, what's your cost? Contingencies and all that. That's crap. You should bring in sensitivity analysis to test your risks. And that risk touches your FX, touch all your risks across board. That's a feasibility. It's like a technical report. Unfortunately, most people don't do it. If they do it, they will get funding easily. Because as we've said here, and thank God, Tola has left. Tola had a long conversation with me earlier. There is so much money. In fact, I was just looking at him. Money is here. It's for us to do the right thing. So those are the 4 things I think I'll bring up.
Thank you very much. So thank you so much. What I heard you say is that there is need for us to make realistic budget, but bearing in mind all the variables that can occur. Thank you very much, sir. So, Mr. Ace, China, you're next. Thank you for the fantastic introduction you gave us about your company and what you stand for. So this is an opportunity for you to tell us more. You often speak about democratizing access to housing across Africa.
Yep.
And in a market where traditional mortgage systems remain shallow, what financing innovations have proven realistic in turning ambition into deliverable projects?
Beautiful question. Did you study me before I came here?
Yes.
Yeah, so I tried to stimulate us initially, but before I go to answering that question, I want to say, Bright, I used to hear of bright young men with bright future, but I've seen the real Bright. And he mentioned something that I need us to pay attention to. I overheard the Honorable Commissioner stating it. 70% of our building materials are imported, but when you add cement that we don't control, it is like an import. It's 80% to 85%. If you add rod that Ajiokuta has not produced since 1960 or before I was born, it's probably getting close to 90%. So if you are deceiving yourself, he also mentioned something about being realistic. If you are deceiving yourself that we have indigenous building materials, I like that song. Wake up, collect your money. In terms of access to democratized real estate, I stated it initially. I was born in 1979. I'm not as young as Bright. But I know that in the early 80s, cooperative banks were stronger than commercial banks. Cooperatives were stronger than any other association in Nigeria organization. And there is a science behind it. There's a law, you can just Google it. It's called the Metcalfe's law that says the power of a network becomes squared with each additional node into the network. It's just n squared. So it means that if two people are using a network and two more people join them, instead of the power of the network doubling, it goes from 4 people to 16 because it's 2 squared is 4. When 2 more people join, 4 squared is 16. So that is how you democratize real estate. We started something in Abuja in 2018. I started real estate very old. I call myself a strong man because people say you don't learn to use your left hand in old age. I started real estate 8 years ago and I was 41. So we started something called social funding. It's a hybrid of thrifting that we tried and it worked perfectly. And then we found out that no matter how you find your way to Lagos, if Lagos is not good, your route to Lagos does not matter. So when we found that social funding could harness funds and use the power of what we call social organizations under Metcalfe's law, we found out that if cement is expensive, no matter how we thrift, no matter how we get to the cement, we'll still have an expensive building. So we now have to start to think how to now indigenalize these materials. I was shocked. Ladies and gentlemen, you can Google it. That bamboo had a similar tensile strength with steel. But who is deploying it? So when we discovered that, we had the solutions, some of it. We now built a very robust R&D department. We're probably one of the few real estate companies in the country with a very robust R&D department. And we are building luxury. I call myself the Robin Hood of housing. We are building luxury to make the profit for the experimental waste of low cost. Why there is no experimental development in Nigeria and Africa is that there is no money to waste on research. My greatest legend of research and the greatest inventor of the 19th century, Thomas Edison, This light bulb we are using, he wasted 9,999 failed experiments. If JP Morgan, who partnered with him, and other people that were financing him did not give room for waste, we won't have the light bulb. And so this bright became very bright for me when he told you about the crisis fund. Until we wake up as Africans and ask ourselves, simple question, when not our forefathers, because it sounds esoteric, my own father and most of the young people's grandfather, like Bright's grandfather, when they were building with mud, grass, and labor of age grade, was anybody homeless in our villages? Until we bring back our brain and begin to think, how can we harness the resources under our feet and make them such that more people can participate before we can democratize housing? And I'm not waiting for you. In 24 months, we are launching our low-cost housing model that plans to take a 2-bedroom bungalow, irrespective of what land. We are still discussing with the land factor with the government. A 2-bedroom bungalow from the present 20 to 50 million to about 5 million naira, using indigenous building materials. And when Bright talked about young people, Bright will build, we're not just building studio apartments, we are going to build self-contained that are for sale. In Nigeria, there is no self-contained for sale anywhere, they're only for rent. You sell self-contained. You have stolen my idea now.
He didn't think you can collaborate.
So why he has stolen the idea is the self-contained, but the building material will collaborate. Imagine when we crash that self-contained to like 5 million, that an average student's father can buy him a house next to his campus. And he doesn't rent his house. He owns his house, that after school, he has an asset he can rent out for when he wants to transition from student to work. So that's what we are doing. So Bright, we go talk, no tell other people. Thank you.
Thank you very much. Bryce didn't steal your idea. There's so much room. If we have 21 million people that are without homes and don't even have a hope of having houses, that means that for brains like you and that of Bright, the future is very bright. So one of the things, thank you very much, sir. Thank you so much. You could see that the applause was much when you spoke, because there are many people here that are thinking, what's all this English they are speaking? I cannot afford a house. So thank you for giving us hope. But one of the things that I want to say here is that I commend Lagos State government. There is a college called Cooperative College, where people are trained to understand what cooperatives can do for people. I happen to be an alumni. I'm actually one of the first executives of that association. And one of the things that I know that the world needs, what I heard you say, is that as Nigerians, we need to be indigenous. And one of the things that can help us is collaboration. So I have in this room, I think I saw him, Mr. Atola Akikugbe. I was in Lagos Business School 20 years ago to do an owner manager course. And since that 20 years ago, all my mates in class, every month we do contributions and a susu. That particular income has helped me to do a whole lot personally. So I want to add my voice to the ladies that were here before, talking about personal discipline. Everybody is looking at the government to be the messiah. I was so passionate about this home ownership thing that I went to do a course in Harvard last year, and I was shocked to hear that in America, they also have affordable housing issues. So the world is looking inward. Saudi Arabia is also building a 30-year, they have a 30-year plan, and they're all looking for money. So Nigerians wake up, we are the ones that can help ourselves. Thank you very much. So the next, my next question goes to Mr. Olanrewaju Kuyebi. Fantastic. Luxury developments are often misunderstood as purely, aesthetics exercises, yet financiers increasingly evaluate operational resilience and recurring income potential. How do you design premium assets today so that they remain financeable across economic styles? The question is quite long. Do you want me to take it again? Or
Yes,
you
ma'am.
got it?
Yeah, I got it.
Okay, thank you.
Good afternoon, everyone. Yes, I'll start by saying this. The word luxury is actually a cliche as far as real estate is concerned in Nigeria today. And the fundamentals are actually there. But for me, if it is not comfortable, it's not luxurious. And when you look at beyond the aesthetical facade, another thing you discover in the recent past is the fact that houses built 20 years ago are better in terms of structural integrity, quality of material deployed, the thought process put in place than what we call luxury today. A building is not luxurious if it's not functional. One of the most expensive household costs today is energy. And you are selling me a luxury apartment that has a window that is less than 2 square meter in a space of about 25 square meter. That means you have conditioned me to perennially use air conditioning system. You are selling me a luxury apartment that I can reach my neighbor by the stretch of hand and exchange pleasantries. What you are telling me is the fact that I am not safe if there is a airborne diseases outbreak. It will shock you that even in the most prime location in Lagos, like Banana Island, town planning rules are being flouted. They want to sell you a $3 million apartment, and when you open your window, you are directly looking at another person's compound. Is that luxurious? So, I say this, and what are we and when you buy those houses, because people don't really do what we do at GMH, and that is post-occupancy evaluation. What do I mean by that? When we finish a development and over, after 2 years, we go back to ask for a result from the occupant. They abuse us, but we learned a whole lot of what we will never do again. And that actually changes in our design processes and even quality of material deployment. So you buy these luxury houses today, and instead of you enjoying capital appreciation, you are enjoying what you suffered is actually depreciation. You are enduring capital loss as a result of the fact that the house is not built to be resilient. The house is not built to be sustained. The house is not built to last. And the reasons are not far-fetched. When you look at premium properties that has endured, we all talk about four-body loan today. You look at it from the standpoint of density. You look at it from the standpoint of management, the facility management is the big elephant in the room. The building is still standing pristine and premium today because of the facility management that is an extension of the development company. So the vision is clear. And that is why when you look at majority of apartment building, they are like majority of them that is even built 5 years ago are looking like the houses built by late Jaconde. How do you enjoy capital appreciation when proper maintenance are not put in place? How do you enjoy tenancy, cash flow from tenancy when property are not properly maintained? And how are you able to flip such property for gain over the years? So, and that is why majority of assets beyond the aesthetics to do valuation. I'm saying Mr. Obose for the first time. Obose, thank you so much for building a compelling brand, because majority of the time before we started using Obose, whenever we do valuation for one entity and we are going to do valuation for another entity, they change valuers. But since we've started using his firm, if we do for entity A, we are able to use for entity Z. And that is power of reputation. Thank you so much, sir. So what I'm saying is this: a house that is not properly maintained is not able to enjoy capital appreciation when you talk about inflation, when you talk about devaluation, when you talk about even in Nigerian market that is a seller's market. You know, Nigerian market is seller's market, is not buyer's market because you don't have many options. And that is why when people compare Nigerian market to South African market and Dubai market, I laughed. Because in those climes, you can live 3 hours away from city centers, and you have a decent transportation system to take you there. So there is no pressure on demand of premium apartment because you can live in Muwe and work in VI, and you are sure in 30 minutes you are able to move from Muwe to the city center. So if you are here, tell me what is the travel time at peak period from Muwe to VI 5 years ago and today? What is the travel time between Agege and Ikoyi 5 years ago and today? It's almost doubled in terms of travel time. So, and the reason why property in those neighborhoods is very high in demand, and developers are taking the advantage of the fact that it's seller's market, scarcity, to actually slam prices on them because people don't really have options. Before the creation of Eco Atlantic, Banana has no competition in terms of size and quality of infrastructure. What come close to Banana is Royal Garden Estate, but it's disadvantaged as a result of location in terms of infrastructure and quality of construction that is going on in there. So, majority of houses that are built now, they are looking beautiful today. In another 1 year, check the houses. In another 2 years down the line, check those properties. They are perennially vacant as a result of quality of craftsmanship that has actually gone down the line. So they look beautiful outward, but are they performing the function of utilization down the line? And that is one code we've been able to crack at GMH. And I'll say this. We have a 3-bedroom apartment. One thing that is very common with an apartment building is once you drive into the apartment, you begin to see funny faces. Those are the drivers, because they don't have where they will sit and wait for their respective bosses. That is one of the solutions we experimented with one of our apartments in Lekki. So we incorporated a driver's lounge with a convenience so that the driver is not going to the boss's apartment to say, I want to use the toilet, because they will definitely need to use the toilet. Another thing we also saw, you built an 8-story building, 7-story building, and you have just one elevator and a back staircase. When there is downtime in the main elevator, downtime for the main elevator, maybe it's ongoing maintenance, how will somebody living in a penthouse access his apartment on the 8th floor? So we created a service lift. Another peculiar problem with an apartment building is the fact that when you come out in the morning, it will be so unfortunate if the first person that has used the elevator carried trash. The odor of the trash will follow you if you are not wearing a very strong perfume. So we created a service elevator to ensure that that is not the case. Another thing we'll try to do differently also is the fact that when you look at apartment building, people build with disregard for how we function. You are selling me a house of 300 million and you are giving me a 1 parking space. You have 15 units of apartment and you have just 20 units of parking spaces. And you want all of us to just move in there. So, you know, so those are the things. And all of these things touch down on your ability to be able to pre-plan properly. So you bought a house. So I'll give you so to wrap it up, to answer the finance, the numbers aspect of the question, because real estate is beyond brick and mortar. Real estate is pure finance. And if it is not economically viable, it's not bankable. So I happens to, So I was privy to an information of recent, and it gladdens my heart. one of my subscribers bought a house in 2021 and he didn't perfect his title, so she wants to resell. She bought when dollar was 560. She bought at 175 million. In 2026, she's reselling the same property for 600 million, even when dollar was at 1.4. Remember, she has lived there for 2 years. She's plugging out. She plugged in with about $300,000. She's plugging out today with about $450,000. That is capital appreciation. So I ask myself, will this client buy again? The answer is yes. Will bank put money in such asset? The answer is yes. Thank you so much.
So my next question is to Mr. Oludare Makinde. Affordable housing has remained one of Nigeria's most discussed opportunities, yet financing at scale continues to lag demand. From your organization's perspective, Q Shelters, what structural barriers still prevent leaders from committing long-term capital to this segment?
Thank you very much. Let me just quickly give a response to Honorable Commissioner's remark to Mrs. Okonjo. Am I right? When she talked about smart cities having low income staying around, that's when you can have smart city. Your response was apt, but however, sir, your response was that the solution is to have infrastructure, transport, rail lines to connect. That's how it is done all over the world. But however, sir, we want a Lagos that is very ambitious than the way it is today, right? Because Lagos should not even be compared to any state in Nigeria. As you are aware, sir, Lagos is a country, more than a country, and all that. So we want an ambitious government because the state has character. You have the capacity to attract fund, to attract capital. So you need to go for it. More ambitious to get this done. That's one. Two, on the issue of building rights, right? Lagos State government give all the code to follow, all the what you need to do requirement. But we found out based on what you said, and it's real, that some developers do not follow rules and regulation. But we want a situation where the government will move in on time, right? Not to wait till people are built and you go and move in. What that causes for the state is that it does not portray the state right in the eyes of investors, in the eyes of people that live outside Nigeria, right? Because, however, because there's a trust deficit about Nigeria. And unfortunately, Nigerians in diasporas, I don't want to generalize, they are not really doing well. People badmouth our country. I've not seen any country in the world where citizens badmouth their country. It's only in Nigeria who go to social media and talk down on your country. And I want the government to look into that. Moving on time, don't give room for people to continually badmouth our country. Thank you very much. To go to your question, yes, I have a different view about affordable housing. We believe somebody says cement is not affordable, road is not affordable, labor today is not affordable. What we need to talk about is affordable financing, right? And what we have done, right, with the government in terms of advocacy, in terms of partnership, is to partner with Federal Mortgage Bank. Today, you can get a loan at 7%, right? We're doing a project in Abuja. It's massive. We call it a city, renewed hope city. It's taking over 2,000 housing units. A lot of people have subscribed. People that ordinarily would not have bought into housing today have subscribed because with just a 10% down payment, you can access Federal Mortgage Bank loan. We also have MRIF. MRIF today, we are aware, is single digit, 9.75. Today, they were able to raise the 1 trillion naira program. Somebody have said is there. They've raised 250 billion. Today, they've disbursed over 72 billion. Imagine that money would not have been disbursed if not for MRIF. So what we need to do is to look at how to collaborate more with government. We've collaborated more with Federal Mortgage Bank, with MRIF, Murphy, with there's this third institution now. It's called, they do help to own. What's their name now? Help to own. There's an help to own family-owned fund. Yeah, we have a collaboration with them to access single-digit funding for subscribers that want to build. So with that, we're able to do a lot what we are doing as regard affordable financing. And again, we have different view about 20 million housing deficits in Nigeria. I do not agree. I do a lot of study. If you go to my village, if you go to Ijebu, you go to Ibadan. So we need to now redefine, reclassify housing deficit to say, is it urban residential deficit or rural residential deficit? Because it's only Lagos, Port Harcourt, major cities that you have this crisis, right? If you go to my town in Ekenyade in Kogi State, almost everybody we have where we are living. If you go to Ijebu, Itele, Ijebu Ife, the same thing with other states too. So I have a different view, just for the record, about 20 million, 22 million, 22 million housing deficit. Yes, there's a lot of research that is going, right? So we cannot come and say this is the estimate. But yes, it should be between 12, 13 million. That is why I said study is still going on. There's no basis for it, yes.
So, Mr. Ori Molade, the next question is for you, sir. So, as I ask this question, you would also give us your, your passing notes, because we have, I don't know how this Ojoro happened, but they told me 5 minutes ago that we had 10 more minutes. So, inflation volatility has restricted project visibility nationwide. What new cost control mechanism should financiers insist upon before releasing funds?
Okay, you say you have 2 minutes, and I should do closing. All right, I'll do closing and I'll add that bit. Hopefully, Mr. Frank, I wanted to throw something at you. The richest man, richest black man in the world is Alhaji Aliko Dangote. When he went live with his refinery, and there were initially little political squabbles. That's the only way I can call it. He made a pronouncement in the newspapers, well celebrated. I'm going into steel. That's what Aliko said. Next few weeks, that's when the issues came up. The only thing we're hearing Aliko was NNPC, and we all know what has happened. Right now, we are hearing about him talking about detergents, creating another factory beside it and all of that. Why I said I'm tying it to inflation, I'm tying it to what everybody is saying here, including my friend here. Let finance be there. Let government provide free land. Hold on, I'm coming somewhere, sir. Let government provide 20% in certain areas, free land for what you call affordable, right? Let there be money. However, nothing is going to change much if you don't attack the construction cost. And what is construction cost? The materials. The greatness of the United States and the developing nations was steel. Well documented. Just go to YouTube, you see it. Steel. You get steel rights, and I'm not talking of Vajagota here. You will cut your cost by, I don't need anybody to give me anything, like 50%. Currently, Boaz, I sent you, FIAPC President Akin Patola, I sent you something some weeks ago. And we have to bring it up. Boaz factory is producing what? Is it POP? It's producing POP. They're about to go. And I just said, okay. That's why I said I'm going to wrap it up like that. I went to AI. I said, okay, let me not use my brain. POP. What products can you do in the housing? How far can it go? I went to affordable housing. AI brought so many things out, and I said, what is wrong with us? So, Mr. Frank, what I'm saying is this. When next you are breaking fast with the richest man, Aliko Dangote, because we know you're friends with him, please let him know that in this program, some of us said, can we wake up and go back to steel? Let's have that conversation so that we'll move this issue forward. That's my closing line.
Thank you very much. So I'll just quickly add, I was opportune to visit a factory in America last November, and they are using glass to the waste of glass products to create aggregate, to create, what's this called? I'll remember. But it's all part of us thinking out of the box. Thank you very much. So, Mr. Ace, institutional lenders increasingly assess governance and community risk before committing capital. You have a project called Alasia Highland, which allocates equity participation to indigenous landowners. How does that model change investors' confidence and project sustainability? When you are done answering that question, please give us your parting notes. Thank you.
My parting note will be Alessa Highlands. So everybody here has just said, as a matter of fact, I feel like Peter on the mountain of transfiguration. I wish I could build houses for all of you and stay outside and just listen to all of you. Because I kudos to the Business Day team. Some of the minds you brought here are really interesting. Listening to them, you know, when you're thinking something and you are the only person thinking that thing, you are not far from insanity. But when you hear the same thoughts from other people, your sanity returns. So thank you for returning my innovative sanity. Alessa Highlands houses do not hang in the air except for steel. We must write this down. Every development is located in a location. And if the location does not buy into that project, the project will have hostility instead of hospitality. And the only thing that can hold development aside the earth is steel, which he mentioned. In my low-cost estimations, if we don't get steel right, we will never rise. Every country rises on the back of steel. Because you can't put earth on top of another earth to rise. It's steel. So let's get that. Alessa Highlands is a sustainable green smart city that we are developing in Port Harcourt that will be the lowest density residential estate. It will be a net zero emissions and energy resilient estate. We are targeting, as a matter of fact, my energy partners have been telling me we can do 50% less cost for power compared to NEPA. That means if NEPA is charging 10 naira per kilowatt, we'll be charging 5 naira. All that beautiful innovation will not hang in the air. It must sit in a community. And I discovered when I got to River State that young people, communities are not hostile. Nigerians are the friendliest people in the world, but also we are easily frustrated and we look for innovative way to vent out our frustration. So to ensure that the Aboriginal landowners own our project, participate in the project, we're not giving 10% equity participation. We're giving 10% equity expenditure allocation to the Aboriginal landowners so they can eat their cake and have 10% of it. So they've sold the land, but in our expenditures, we add 10% for their CSR. One of the strongest words I've heard since I started business is responsibility. And thanks to Stephen Covey in his book, The 7 Habits, that made me know the power of responsibility. If you can reduce power and weakness to 2 words, the weakest word in the world is complaining. The strongest word in the world is responsibility. And we started this because it's expenditure allocation. We started this even while we were acquiring the land. And our model has been studied. I think BusinessDay did that study. Indorama Petrochemicals, former Element Petrochemicals, adopted 7.5 profit share. But because real estate is a game of patience that even Bright, that is still young, knows that you must be patient. So we didn't want the community to be that patient with us until we start making profit. So we started allocating them in our expenditure. and they have become the most hospitable, the most protective, the most marketing. I sit and the king of Alessa community will call me. I'm in Abuja. I'm with so and so. I've just introduced your company to them. They've been helping us sell Alessa Highlands. And in conclusion, we had to use our brain, like I've discovered most of the minds here. Alessa is the name of the community where the refinery, NMPC refinery, is in Eleme, Port Harcourt. In the mayor of housing, we realized that the brain is the only asset stronger and bigger than real estate. And we have both of them. So we had to create a meaning for Alessa. And that's my parting note. And after we searched, we found a meaning for us that made the community have goosebumps and support us. For us, we gave the meaning of Alessa as advanced living environment for sustainable advantage.
You have answered because you had a long go at the first time. So I would just like you to give a parting note, to the audience in about a minute. Thank you very much, sir.
Okay, thank you so much, ma. My parting note will be the bane of developers in Lagos today. I want to appreciate Dr. Olumide since his dispensation from 2023. I think we have less collapse of building. In 2016, we have a major one. And that means there is something they are doing right. But the problem is this. When we get money at 34% or 37%, as the case may be, even when in our sleep, we are paying interest. So, our challenge is this. We put in for approval. We will pay for stage certification lab car. We'll pay for LASPA. But you discover that Loma still come and lock your site. Lagos State Material Testing Laboratory come and lock your site. Ministry of Drainage will come and lock your site. Fire service, if you are building an apartment building, will come and lock your site. I want you to do something for us because the only thing we have is time. Just imagine the travel time if the Fort Milan Bridge has been built. We are backward not because we have bad leaders. We are backward in this part of the world because we lack respect for time. That's why we are backward. When you look at the cumulative of, and that's why majority of the time, projects are not delivered to time. And when you don't deliver to time, you can't deliver to cost. You cannot. So, sir, can you help us to integrate all of this agency so that we'll pay for approval and pay at a go? Just look at how seamless stage certification is. You just call them when you are ready. They come because you have paid for it. They inspect. They check your construction drawing. If there is alignment with it with the approval drawing, they approve. You cast your slab. And that has actually reduced the rate of collapse. But the truth of the matter is just that the other agencies, they need to help us. Because if you take 2 billion from bank today and you are paying 34%, on a daily basis, it will shock you. You are paying an average of 1 million on the facility. So if somebody come and lock such project for 2 weeks and we are resolving it, I have lost 14 million doing nothing. Please and please help us address it. Thank you so much, everyone.
To respond because you can see everybody is clapping. Thank you.
We'll give him the time to respond.
Yes, we're going to give it. Please, no. So, Mr. Oludare Makinde, with your last question for this panel and then your closing remark. The question is, energy efficiency and operational sustainability are becoming underwriting considerations globally. Are Nigerian lenders beginning to price efficiency and operating performance into financing decisions, particularly for residential estates? Thank you, sir. You want me to read?
That's a pitch concept.
I
That-
just repeat the last verse. Let me
Okay, so are Nigerian lenders beginning to price efficiency, just what you were saying, efficiency and operating performance into financing decisions, particularly for residential estates? It's close to what you just said now.
Yeah, definitely yes. Uh, definitely yes. It's a new. It's not really new, but it's new in Nigeria, right? So, and capital normally flow to where it will get superior return, and like somebody said, where exit, it can also get exit, right? So there is happening. It's normally priced into residential housing, right? Well, but let me just say something to my brother, right? And that's what we have done as a business. We go to market to raise money. We try to avoid bank that gives us 34% by putting the right governance structure so that you can raise for 24, 23, 22. That would do a lot for your business instead of going to the bank. You know, because you are aware there's a mismatch between there's an asset liability mismatch for real estate funding. Right, it's a long term. I will want to deliver quality to our subscribers. So you need to look for alternative way of sourcing finance. Thank you, Business Day, for having this. We're grateful. Thank you.
Hand over to the our honorable commissioner. From all that we've said, we didn't have enough time to exhaust all the things that we had to say. But what I heard them say was that there is need for us to be indigenous as Nigerians. There's need for us to look inwards. The cooperative model is like a democracy system where is welfareism. People come together, they contribute money for a reason. The Federal Mortgage Bank of Nigeria would lend money to a cooperative that has land, that has good title, and they will give you money to build at 6% interest rate. And the money is payable until, because you have a land already. So that's one avenue most people don't even try to get into. Everybody in Nigeria wants to own their thing. What if 2-3 people, young adults, own an apartment? You're a landlord. Another thing we often do is that we want to build where our dream home is. We want to encourage you to start with your seed home. Like my brother said, when we talk about housing deficiency, is it just Lagos? But even in Lagos, can you start from Mowe? Can you start from Ekpe? Can you start from Ibejuleki to own instead of everybody wanting to do GRA? Start from where your hand can reach. Then I want to speak to young people. My gentleman, Mr. Bright here. A lot of us in the Western world where they have brainwashed us, people start to own their own homes as young adults from the age of 18. So there is a call to young people now to begin to have a savings culture. Start to come together to say, but before I'm 25, even if it's a plot of land, let me own one. Time will not permit us to say a whole lot. Then talking about capital, you as your own self, individual, are you credible? Those are what those two ladies said. So thank you so much for having us. I want to now yield the floor to the Honorable Commissioner. Thank you.
Yeah, thank you very much. I'm happy actually that questions have been posed to me. And let me first start with demolition. Now, let me just use the example of what happened in Abuja when the minister went to a particular site. Remember what happened thereafter? We got to know that when they brought in the submission, they told them that you cannot build in this area. They didn't collect the application from them. They now went to site and started work. At setting out, 2 officers were there. They did not listen. At foundation completion, officers were there. They did not listen. That's exactly what happens in Lagos. I can tell you authoritatively, in Lagos today, there is no single site anywhere in Lagos that you will start work and one of our officers will not visit. But what we normally have is that at that stage, you may have 1 or 2 personnel going out. And what we normally have is hostile condition where they will harass those officers and they will go back to the office. As we have it in the law, you must give notice. When you approach a site, you ask, where is your approval? They don't have approval. You say, please avail us with your approval. If they don't respond, after 7 days, you come back again and you serve. But what I can say is that even where you have approvals granted, look, I've been a developer. And if I use the experience of where I was trained, that's Lagos Business School, Lagos Business School would rather pay a penalty of, would rather pay 500 million naira than to pay a bribe of 5 naira. For those of you that have been to Lagos Business School, what they teach is ethics. Whatever they want to do is what is designed. But outside, you've got an approval, the setback in the front is 9 meters, you go to site and you turn it to 6 meters. Why will they not harass you? You have a setback at the back, which is supposed to be 4.5 meters in major areas. I saw my friend inside, it was 3 meters. And you made it 3 meters without authorization. Why will you not be harassed? And we will serve. We have cases where officers will go and they will detain them until about 3 years ago that we now have a fully fortified team. There's no site again. Let it be military buyer. So long as it's private resident, we can face anybody now. But before, what we have is they use their force to intimidate us. And it takes time. The officers will get back to the office, write to his DO. The DO will also do his own exercise. If it's not forthcoming, then they raise to the general manager level. The general manager level will do his own before he raises to the level of commissioner. There cannot be any demolition without either the governor or the commissioner. If it's a group of development, it has to be the governor. If it's a single development, commissioner can approve. But what I'm trying to say is that if you have done the right thing, there is no need to come and touch your building. There is no need. And like we all know, we're all talking in what we call what? Real estates. It is real. You cannot hide it. Yes. And you have a cantilever in your drawing that is 1 meter. And on site, you turn it to 2.2 meters. Forever and ever, they will be harassing you. Because you have given them the opportunity. If you do your things right, nobody will ever harass you. There are cases again that, because this is very frequent to me, when somebody will call me, please, they've served me a notice from LASCA, and they're saying certificate of completion. The law authorized us every 5 years. Once a building is completed, you are expected to get certificate of completion. While it's going on, you have stage certification. Setting out is okay. Foundation is okay. Decking is okay. Roof is okay. They give you certification. And when you finish, they give you final. But that started about less than 2 years ago. And some of our officers will go out for a building that has been completed 20 years ago and say, show us certificate of completion. It can't be possible. It cannot be possible because you have completed your building before the formation of even that agency. But what the law says, and I'm happy that somebody also talked about maintenance, which also improves the building, is the fact that every 5 years, you are supposed to get a revised certificate of habitation that, okay, this building is still okay. And that certification, who is it useful for? To get a third right to help you certify. Let me give you one example. When American Embassy, when they got a land at Eco Atlantic, they were invited and okay, they did their study, okay. They wrote to us that we should confirm the authenticity of that Eco Atlantic. Look at that kind of organization. But here, our people will not, our development plans are there. If you Google it, you will see it. You go to any planning office, you get the hard copy. You will see the maximum area you can go in any particular area. You will see all the definition and specification there. So if you bought a land with the intention that you want to build 10-story in a place where you can build 6, that's wahala. Unfortunately, we all know, Omonile, once the money is gone, the second you give them, 2 seconds after, it's gone. You can't get it back. You are now hooked. We have a lot of cases like that. Just recently, we had a case where somebody committed money without knowing that there is a diplomatic enclave. We have cases like that. If you have the house of a vice president, the Lagos resident, and you think you want to build 6, 8 story, it's not possible. It's everywhere in the world. It's a standard for security reason. And instead of taking your faith, you start lobbying, trying to see whether you can bribe people. You can't go anywhere. Again, it's real estate. Anybody will come to it at their own time. And I think they also talked about agencies that visit a site. Well, I was at a seminar sometimes last year, and one of the presenters there, Tamplana Ide, he was invited as a consultant on a particular job. And part of the report he was giving them was that agencies that they will have to interface with. And he listed them to about 13. And they are real. But the thing is that majority of us don't even know their role. Anytime I talk to the press, I have the opportunity, I take time to explain. You have, sometimes last year, we rolled out 136 estates as illegal. It's a fact. It's a fact. Areas that are marked as green within those estates have been turned to other units because the business was booming. If you hold your certificate, it's always there. You don't have any right to alter anything. If your name is Olu and they put Ola and you think you can just change that small part, you have rendered that certificate useless. It's the same thing with our approval. And it's here on the stamp that you don't have right to alter. You are expected to build as given. So we have the development matters that will go. Those are the people that grant the layout. They also have the right to come and check. You have LASPA that grants the planning permit. They have rights to come and check that, okay, the approval I gave, they are following it on site. You also have LABSCA as the control arm to also visit your site. I mean, if you don't think properly, you are supposed to invite them at every stage where they will give you certification. There are cases where they've not been invited. Maybe they got there at the later time. There has to be some examination of what you have done behind them. You also have material testing. If you engage a consultant, they will give you the brief of all these things. And when you are planning your project, you will know at what points to interface with them. And clearly, what these people are doing is not to any government benefit directly. It's to the owner. If we say we have material testing laboratory, the owner of the building might be insurance person or doctor, medical doctor or lawyer. You don't have any idea of the business. So are you sure that what they are putting up for you is good? That's the essence of all these agencies. That when they are doing the casting, the material testing will take a sample of the concrete and go and test whether it's going to meet the standard that was designed, or check the reinforcement, whether it's the same with what the engineer recommends. So if you don't invite them at the right time, I mean, they have to mark your building. You also have waste disposal. There is no site that you will not generate waste. If you have done your thing very well, Ab initio, you're supposed to have informed them, I'm starting construction, and they will give you your PSP, who will come in regularly to cut away all the rest. So if you don't invite them on time, they will come and harass you. You also have the safety commission, who are supposed to ensure that the safety of the workers are well kept. Now, the drainage on, I mean, where you don't have drain, then can never, I mean, officers from drainage section can never come. It's these areas where you have drain. And what we normally have there is, I can say 99.9. This is the end of my plot. This is a drain route. I'm expected to put my fence where it is designed. But I have a feeling that there's nobody here. Let me add 1 meter. That is what happens every time. And that's why they will come. They will say, after all, the water is here. But the day they need to evacuate the refuse, the swan boogie will pull the thing and by the side, will allow it to dry before the truck will come. So that space beside that drain is equally important. Without it, you can't evacuate refuse from that waste. You also have fire brigade, but these are for specialized buildings. Also, earth control officer. The important thing is, let's do. No, it cannot be one. It cannot be one. What we are driving at is for them to go out with a single form. It's a single form, so that it will not appear that there are people that maybe at the commencement of their work, they approach safety commission, and the safety commission will give them approval, and they move to site. Where you come and say, where's your approval? They will bring you safety commission. That's not the approval for the building. And there are different departments. Safety commission is under special duties. Drainage is under Ministry of Environment. Fiscal planning, we have our own. So they can't come, because even the time they come to site varies. But my advice is that let's try and do the right thing. If we find ourselves in a position that we don't know the right thing, there are consultants that we can engage. And if you have a project that is, I want to expect that at this level you are, all your guys here, you'll probably be talking of big, not one or two buildings. Ab initio, you are expected to have a town planner. If you have gotten a town planner, if he is thorough, he's supposed to have given you all the agencies and make plans to approach them. If you have any problem, that means either you have not engaged correct person. That's just it. Thank you very much.
So before you conclude, I would also add one sentence to the commissioner. It will be right when government approves some of these focal consultants, so that we don't go to engage the wrong person. So that once we go to that agency or person, they coordinate for us those 13, and we don't need to go either to the wrong consultant or miss any of the 13. Thank you very much.
Thank you very much. Please, let's give a warm hand for the commissioner and for all our panelists here today who were able to compress their thoughts into the available time we had. Very quickly, we want to take pictures, so I would like to invite the publisher of BusinessDay, Mr. Frakai Bugun, to the stage, and also the Honorable Commissioner for a quick round of pictures. Today has been rich. Today has been enriching for everyone here today. We've heard about financing and financing smart and credible property assets and how to do so under capital discipline. We all want good houses and we want them affordable. We can't have that if we don't have these conversations. Also, Mr. Publisher, please, and can the publisher and the Honorable Commissioner please remain on the podium as I call the representatives of Mayor Housing. Let's take a picture with our sponsors. Flinks Realty, GMH Luxury, Powton Morgan Holdings, Shelter, Maypass Homes, Venco, and Fiabsi. One representative from each of these companies, please, very quickly. Thank you very much. Thank you for trusting us. Thank you for partnering with us, and we appreciate it a lot. Before we're done for today, and I'm sure that we've all gotten, in fact, not one, not two, not three, but up to a lot of insight into property investments. Yes, so we'll take a minute to watch a
Welcome to a living room designed for life's most joyful moments. At GMH Luxury, our spaces are crafted to exceed the ordinary and meet your highest expectations. Discover our 1, 2, and 3 bedroom flats located in
speakers. They really contributed in making the conversation today really enlightening and enriching and insightful. We know that recently the NBS rebased GDP, and it showed that the real estate sector contributed the third most to GDP. Having listened to the conversations today, I believe that it's only a matter of time before we even start to see the real estate sector even contributing perhaps the most to GDP. Because you can't deny the fact that there are a lot of opportunities in that sector. So thank you so much to our speakers. Thank you so much to the Honorable Commissioner. Thank you to our sponsors as well. I can just call the names of the sponsors. Thank you so much. At this point, I'll just wish everyone journey messes back to their different destinations. Thank you. Okay, to just call out our sponsors to say really big thank you to them. The Mayor of Housing, Finks Reality, GMH Luxury, Palton Morgan Holdings, and Q Shelter. Thank you so much. This event wouldn't have been possible without them. So thank you and God bless.
Welcome to a living room designed for life's most joyful moments. At GMH Luxury, our spaces are crafted to exceed the ordinary and meet your highest expectations. Discover our 1, 2, and 3 bedroom flats located in Lekki Phase 1. Our bedrooms are designed for moments of joy and connection. Imagine relaxing and sharing laughs with loved ones in a space crafted for comfort and togetherness. At GMH Luxury, our kitchens are designed to bring warmth and functionality to your home. Picture yourself cooking together and enjoying intimate moments in a space crafted for comfort and style. Explore our 1, 2, and 3 bedroom flats in Lekki Phase 1. For more details, call the numbers on your screen and elevate your living experience today.
Something big has hit the city of Port Harcourt and about to quickly spread throughout Africa. The biggest value monger in real estate in the world and the fastest rising housing brand to come out of Africa. It is your real estate solutions expert and your best plug to getting the best all-round value and returns in housing that would make you shout wow and how. But behold, the man that has taken it upon himself to solve the housing deficit in Africa through your collaboration and innovative solutions that are simple, sustainable, and affordable. But behold, my ace China, the mayor of housing and your real estate success strategist. He can make you money and make you happy in real estate because he doesn't sell houses or lands. He sells value.